Let's get seated. We take this opportunity to welcome all of us that are already seated. There are members who have retired, active members from all over the nation, and also those who are deferred and they are watching us from all over. We take this opportunity to welcome all of you. Thank you, our board of directors who are with us, the trustees, including the service providers, karibuni sana, including all of us that have mentioned. We shall be physically in the meeting and also virtually. Those who are watching us virtually from all over the nation, from Mombasa, that is county number 1, Kwale, all through to Kirinyaga, county number 20, Nyandarua, Makueni, Nyeri, county number 19, county number 21 to number 40, that is Moranga, Kiambu. Those watching us from Moranga, Kiambu. Those watching us also from Turkana, county number 23. West Pokot, Samburu, Trans Nzoia, that is Kitale and its environs. Uasin Gishu, Eldoret, including Moiben, the boot basket of Kenya, where maize come from. Elgeyo Marakwet County, where MC number 2 is coming from. That is C10 and its environ. Nandi, those who are watching us from Nandi, including Nandi Hills. Those who are watching us from county number 30, that is Baringo. Those watching us from Laikipia, Nakuru, Naivasha, Narok, Kajiado, Kericho, Bomet, Kakamega, Vihiga, Bungoma, and county number 40, Busia. And we shall go to county number 41 to 47. Those who are watching us virtually from county number 41, Siaya, Kisumu 42, Homa Bay, Migori, Kisii, including Nyamira, and then Nairobi County, including those watching us from Westlands, Eastlands, including Kitengela, Ongata Rongai, and its environment. Our members watching from our offices, situated in Nairobi and outside Nairobi, those who are in Nyeri and you are active in office and you are watching us, karibuni sana. Let us all wave to the people who are watching us all and say welcome to our AGM. Karibuni sana, tunawakaribisha wote ambao mna watch sisi virtually na sisi ambao tuko on ground physically. We want to welcome all of you. We thank God because of those who have come. I recognize the presence of 2 retirees ambao walifika mapema sana. One called Daniel Osoro, PF number 22986 from Kisii. Where are you? Asante sana, asante sana. We recognize the presence of also Wanjohi, who was our head here in City Square. Wanjohi coming from Nairobi and Nyeri, karibu sana. Karibuni sana, PF number 20582. And lastly, among others, we have also Pamela Abuto, who has come all the way from Homa Bay. Homa Bay, Pamela, where are you? Thank you very much. And Omai, just retired when I just left. Omai, karibu sana. Let's wave. Let's wave, all of us wave to everybody now that is watching us all over. Karibuni sana. Let's take this opportunity now to pray. Our Father, in Jesus' name, we appear before thy throne of grace this wonderful morning because of bringing us together. Thank you because of our board of members and our trustees. We thank God because of the retirees who are being represented here and those who are watching us virtually. Thank you because of the active members all over the nation, as we have spoken from county number 1, that is Mombasa, and up to county number 47, that is Nairobi. Thank you because of all of us. We thank you, Lord, because of helping us to come through all the 365 days from the time we left one another here in May of 15th of 2025. We were seated here again, and after those days, you brought us together. We are grateful to celebrate and to bring ourselves together on our AGM, on our 24th AGM and our 16th AGM. As we come together like this, we commit this program before you. We commit the speakers before you. We commit all the presenters before you. We commit all those who are going to give reports and statements about the finances. We thank you, Lord, because of all the service providers. We thank you, Lord, because of everybody that has continued to sit down to bring to this program to order. So, Master, as we commit it before you, help us so that as we come to the end, we shall not forget to glorify you. We shall not forget to thank you. We are grateful that, Master, you brought us, and there are others that were together last year, and we are not together here today. We are grateful that you've kept us, Jehovah Lord, and we don't take it for granted because it has taken your mighty hand. We say sorry for those who left us. We say sorry for those families who have lost their loved ones, that we cannot be together with us. We pray for their families. We pray for their siblings. We pray for their wives or their husbands. We pray that, dear Lord, you'll be able to. So, Master, may your will be done as we come together like this. We pray that all the programs shall run well, and at the end of it, we shall rise up to thank you and to glorify you. So bless us together and yoke us together for thy glory's sake. For this is our prayer in Jesus' name. And we all say, amen. So it is live on YouTube and also live on Facebook. It is live on those two forums. On those two. So karibuni sana. So nataka kuita mwenzangu aje ili aweze kuendeleza kutoka hapo. Karibu Mr. Nyaseme.
Thank you, Mr. Sawe. Umesikia hiyo moto. Hata unashindwa kama ameritaya ama hajaritaya. Hakuna moto hata kuliko ya emergency. But we thank him. He is a good man. And we thank God for him. We want to move fast. Our time is far much spent. We want to do the welcome remarks and introduction.
Thank you so much, our MC. First of all, my name is Weldon Cheriot Kirui. I'm standing in for our chair, who was not able to attend this AGM. She has a sick father, so kindly receive our apologies, but she might join us online. That is Madam Suleika. MC, can you pass the mic to the trustees to say their names? Perhaps before we do that, all our service providers, you can stand up and wave to the crowd. That is our actuaries, custodians, property managers. Welcome so much. Yes, we start with SPS.
Good morning, all. Good morning. My name is Mogo Mwai, a trustee in the old scheme, commonly referred to as DB scheme or closed scheme.
Good morning. I'm called Moses Sodoyo. I'm a trustee in new pension scheme. Thank you.
Our host.
Good morning. My name is Joseph Tele, trustee old scheme.
Good morning. My name is Nancy Madenge. I'm trustee in the new scheme. I'm also a pensioner.
Pass it to our chair here.
Good morning, everyone. Thank you so much. My name is Fred Siengo, chair of the new scheme.
Good morning, everyone. It's a beautiful morning. We were here last year, and we are glad the Lord has kept us safe until we are able to see this day again. My name is Jacob Otieno Opere, a trustee in the new scheme, also known as the DC scheme. All are welcome.
There is a new trustee who has joined us. Kindly introduce yourself.
Good morning, everyone. My name is Trustee Pauline Tuwei, a trustee in the old scheme. Thank you.
Yes. During the year, our trust secretary, that is Koske, resigned. And we've got a new administrator who is in acting capacity as we feel the position substantively. So allow me, members, to introduce our new trust secretary or the administrator for that effect, so that he can take over and read for us the notice convening this AGM. And perhaps we adopt the agenda, declaration of interest, then we move on. Perhaps come here. We'll keep it candid. The AGM, in as much as we want to do a compliance thing, we also want to interact freely with our members. And thank you so much for the senior citizens who have made to this meeting. Congratulations so much. Led by Sawe. When did you retire? Thank you so much. Karibu sana, Korit.
Good morning, Chair of the scheme, trustees, service providers, members, and secretariat. Good morning. Today, we're here for our annual general meeting. And before that, my name is CPA Peter Korir. I'll be standing in as an administrator on acting capacity. We shall together today be able to attend and ensure that we do our annual general meeting as scheduled. As you know, on 12th of May, we put a notice to members that we shall be having annual general meeting on 26th of May, which is today. We shall be reporting the report for financial year 2024-2025 financial year. Members, that was the notice that we gave. Members, again, before you proceed, I would like, again, the chair of the new scheme to lead us in adopting the agenda first before I proceed.
Okay. So members, you have the honorary opportunity to propose and second the agenda of the day. Can I see by show of hands?
Proposer?
My name is Kibet Robert. I stand to propose.
Thank you, Kibet.
Seconder?
Good morning, everyone.
Morning.
My name is Vincent Momanyi, and I do second.
Thank you so much. Thank you, Bwana Momanyi, for that confirmation and secondment. So, any conflict of interest? Any conflict of interest? So that we can record? None. You can proceed.
So, members of the old scheme, members of the new scheme, I'm going to go through the minutes for last year's general meeting that it was held last year on 15th of May. We shall start with the new scheme. Members, as you can see on the screen, we have on the first page the trustees who attended, and we have the service providers and guests who attended that day as listed there. The next page is the agenda that we had last year. And on the first page, the same day, we had to give that we had given notice, and it has been recorded in the minutes. Then the next item is agenda that we had last year. That was the agenda. Then the next item. Next. So, members, as you are watching, we shall be going through page by page. So you'll be able to see the minute number 1 is the confirmation of minutes of 15th annual general meeting, which was held in City Square here. It was proposed by Khadija and seconded by Sylvester Nyasembe. Then there was also the report from the chair, and then the chairperson represented the financial report for 30th, for the financial year ended 30th June 2024, and noting that the scheme had some financial challenges, it likely caused by the continued non-remittances of the employer. There was also, the chair also reported that the scheme had an increase from 1.1 billion, 1.2 billion to 1.3 billion. Then also the chair also continued to tell members that there was some challenges in the new scheme because of the cash flow. You see, the new scheme is not repeating remittances, so it is operating and investing on what was received. The chair also mentioned that the RPA, that they are in compliance of all statutory and what is required as a scheme. And then the next page. The next page also was the presentation of financial statement. As you can see, members, the financial statement for as of 30th June 2024, we received a report that in 2023, the previous year, it was 1.2 billion. And then what was reported last year is 1.3 billion. So as at 30th of June 2024, the scheme was 1.3. That was what was reported by trustees last year. The next page. We have also the same, showing inflows and outflows. You can see cash and cash equivalent, and then the net there again is 1.3 billion. That was also reported by the accountant and the auditor. The next page. We had also statement of net asset available for benefit. As you can see, members, that was a cash flow statement which was reported last year. You can see the net contribution there, it was 45 million. Then the benefit that was paid that year to members who had left service was 98 million. There was also administrative expense of 35 million. And then we had also investment income, which was totaling to a net of 114 million. And then there was the closing figure of 95 million compared to 2023 of 69. That was also the report that was given last year. We had also the report from the auditor. The auditor gave us a report of the financial position of the scheme, and that was the report. I can read also the last paragraph. Without qualifying our opinion, we will draw attention to note 16 of the financial statement showing that the scheme has contribution receivable from the sponsor amount to 1.265 billion. And in 2023, it was 1.229, 465, 633, and interest unremitted to 1.1 billion. That is also what was reported last year during the AGM. The next page. Members, again, we also received report from service providers. The first service provider which they gave us the report was a custodian, and that was the report from custodian. They talk about their responsibilities, what they are doing, and the responsibility for keeping financial assets of the scheme. Custodian providing report to accounts for customers and investment portfolio. Custodian implementing investment instructions, and also in the title deed for the scheme are being kept by the custodian. Then also, we had also a report from KCB, who is also that is the custodian again, our custodian, and he was giving us, as at their report, it was amounting to 1.3 billion. That was also what was reported by the custodian. Then RPA, members again, RPA, are our regulators. They gave a report that the new scheme continued to operate within the provision of the Retirement Benefit Act, applicable regulation governing the retirement benefit scheme in Kenya. The authority noted that the trustees had maintained appropriate governance structures, regulatory reporting, oversight mechanism, and protecting members' retirement benefit. The regulator again acknowledged that the scheme was facing financial pressures arising mainly from delayed and unremitted employer contribution. These challenges had affected liquidity and overall scheme growth. However, the authority observed that the trustees were actively engaging stakeholders and pursuing recovery measures to address the funding gap while ensuring continuity of operation. The last paragraph again, and let me read it again. The authority assured members that the new scheme remained under active regulatory supervision and continued to comply with statutory requirements. The RPA committed to working closely with the trustees and the sponsor to support corrective measures aimed at enhancing the scheme's sustainability and safeguarding members' retirement savings. Then there was also a report from the sponsor to members. The sponsor also acknowledged the important role played by the retirement scheme in safeguarding employees' retirement benefit, reaffirmed its commitment to supporting long-term sustainability of the scheme. Representative recognized the financial challenges facing both the sponsor and the scheme, largely arising from challenges within postal and communication sector and broader economic conditions. The sponsor informed members that the efforts were ongoing to stabilize corporation financial performance in order to enhance ability to meet statutory and scheme-related obligations. The management continued to engage stakeholders and government authorities in keeping sustainable solutions to address legacy liabilities and funding pressures affecting the scheme. The last paragraph, members, the sponsor also reported to members last year that the sponsor expressed appreciation to trustees, members, stakeholders for their continued cooperation and reaffirmed its support towards strengthening governance structures and securing future sustainability of the scheme for all beneficiaries. That was what was presented by the sponsor. Members, that is what was deliberated and presented to members last AGM. Before we proceed, we need to confirm, is that true representative of what we discussed last year? I want who proposes? Who proposes? Is that the deliberation we had last year for the new scheme? Who proposes?
Any proposer?
Any proposer? Anyone who was there last year, who attended the meeting, is that what the trustees presented to members last year? Proposer?
Hello, my name is Jonathan Mutete, and I propose.
Who second? Seconder? Sia? Okay.
Good morning again. My name is Vincent Momanyi, and I do second.
So members, the minute has been confirmed as a true reflection of what we discussed last year. We need again to go to so that we clear this one. We need to go through matters arising on the same minute so that we can go to the new scheme. Matters arising. The first one was the scheme fund value and financial position. Members sought clarification regarding reduction in the scheme fund value. The chairman of the Board of Trustees explained that the decline resulted from accounting impairment, retirement under international financial reporting standards, and did not represent an actual loss of the scheme. It further clarified that the scheme financial position is expected to improve upon settlement of a sponsor application through the proposed transfer of identified assets. So members, that was the concern of the members. And the trustees explained that the scheme is facing liquidity challenges due to many employees recruited and the same period retiring simultaneously. So the scheme currently the year that they were reporting, there was a slight increase, not as the returns which was coming in. So the concern of members was asking, why is the scheme in that case? So the fund value current members will see from the report, and that report for that year, that was the response on that item. The next item, number 2, is liquidity challenges. So I've also captured that. This is because currently the scheme is having members who are leaving service. So as much as the scheme is generating income, there are retirees withdrawing from the scheme. But we shall report in the current year, you will see what has happened. But last year, those are the challenges. But the scheme was able to meet all the obligations for the members who are leaving on what has been contributed to the scheme. The next item. There was also the sponsor obligation and unlimited contribution. Then the sponsor representative informed members on what is being done by the sponsor. That's they recognize the financial obligation to the scheme and identified properties for transfer to offset part of the debt. Then also members were informed by trustees that the legal action had been taken to challenge certain regulatory enforcement to safeguard the scheme asset from liquidation process that could have adversely affected members' savings. Patent was requested due to government approvals, procedures, and administrative processes. That is also what was discussed and what is Amanda arising from that from the minutes. Again, members also raised also concern of one of the members that can they be deducted from their payslip direct to the can the deduction be done and taken to the scheme from their payslip privately on their own? And then the trustee clarified that pension regulation requires occupational pension contribution to be remitted through employer's payroll system. And that is number 4. Number 6, investment strategy by the investment strategy by the trustees. Trustees further indicated that the investment restructuring is under consideration to better align asset with maturity anticipated in the retirement. The trustees also, in the investment, they will realign to ensure that as at the time you are retiring, investment should be maturing enough to pay those who are leaving service, and also to put in investment in areas that they will give us revenue enough to offset all the obligation. That was what was in the new scheme. Then members, I want to request that we go now to the minutes of the old scheme. Old scheme, Postal Corporation of Kenya Star Pension Scheme. The first page, members, is the list of the attendants. And I know on the other one that I've reported, that we had on the first page, we reported the list of trustees and secretariat and also the service providers. So on that list, the list of members who attended was in the last page. It is there in the minutes that I already read. So there was a list, a long list. Same with this one again. So the first page, we have the trustees who attended. There were 6, and there are 6. So all of them attended the AGM. And then we had also the sponsor, the secretariat, and service providers. The next page, there was also a notice read by the former the first page is what was our agenda last year, our AGM last year. This is what was there, as you can see, from number 1 to number 14. Then the next page, members, the trustees confirm the minutes for 23rd AGM, which was done on 15th of May 2025. Then the next item was the report from the chair. And then the chair, Shulega Mohammed, welcomed the members, and she appreciated the continued support from trustees, stakeholders, and lighting importance of the collaboration in ensuring effective governance, sustainability, success, administration of the scheme. The chairperson noted that the economic environment during the year remained challenging, with investment performance affecting the market, volatility, rising inflation, and reduced government spending. Despite these external pressures, the pension scheme demonstrated resilience and maintained positive momentum, and reflecting prudent pressures, the pension scheme demonstrated resilience and maintained positive momentum, reflecting the prudent management decision and strong commitment to safeguarding members' retirement benefit. She also explained that old scheme was close to new members from year December 2009. And current, as at last year, when they are reporting, the total members, there were 2,200 pensioners. And the scheme primary objective remains providing reliable retirement income and supporting beneficiaries of deceased members. During the year, the pension payment was totaling to 372 million last year, at the year of, that is 2024, 2025. For this year, it will be reported by our accountant. Also, the accurate evaluation again, it was indicating that the funding level was 100.3. Also, regarding investment in property, the chair also, the property asset increased in value to approximately 3.39 billion, although they constitute 63% of total asset, generate relatively low in returns. Trustees plan to grow the fund to 6 billion through property disposal, the side investment, digital transformation, improve efficiency, strengthen long-term performance strategies. The chair expressed appreciation to stakeholders, including trustees, the sponsor, members, and service providers, for the support. Then, for the support and dedication during the year. That was the report presented by the chair last year. The next page, members, is the financial report that was presented. The first one is statement of changes in net assets. It was showing in 2023, the total asset, it was 5 billion. And last year when they were reporting, it was 4.8 billion. So there was a reduction from 5 billion to 4.8 billion when they were reporting last year. That was the report that was presented to members last year. Then there's a statement of asset available for benefit. You can see, members, on the first line, there is transfer in. There was 59 million. Then the next item, which is very important to members, the trustees report to members that the total payment in terms of lump sum and monthly pension for the retirees was amounting to 371 million. Then there was investment income of 271 million, and then investment management expenses, and then net return was 216 million. And then giving us the total asset or net asset available for benefit at the start of the year, it was 5 billion, closing at 4.8 billion. So the next page, this is a cash flow showing what was coming in and going out on this, about the scheme. This is what was presented last year. As you can see, members, this is now the summary. The benefit, total benefit paid, that is monthly pension and the lump sum. You can see it was 4.2. And then the total net cash generated from investing activity last year was 331 million. Then that was what was reported last year. The next page. The next page is auditor's opinion. The auditor presented the report of the financial position of the scheme. And I will read. The auditor gave an unqualified opinion and reported that the financial statement were a true and fair view of the financial position of this of financial position as at 30th June 2024, and its assets and liabilities disposition on that date in accordance with International Financial Reporting Standard and Retirement Benefit Occupational Retirement Benefit Scheme Regulation 2000. Regarding the emphasis of matter, attention was drawn to members. That was a key item we the auditor reported to members. Note 13, the financial statement concerning the allocation of the scheme investment, where the investment property exceed the limit outlined in RBA Act 1997. This investment category accounts for 63% of the total assets. This investment of 63%, the investment property has a low return of 3% compared to other investment categories. The trustees should dispose the property and reinvest the funds into investment with better return. That was the concern of the auditor, which he reported to members. Then the next, we had also report from our service providers, the report from the actuary. That is the report from the actuary. There was also custodian report, as you can see, members. Then also the fund manager's report as presented. The next page. The next page, members, is the advice the trustees on compliance, the asset held by the two funding as at 30th June. This is a summary, what we were given. The IPS investment plan and RPA regulation. You can see, members, each line, we have cash. This 1% allocation. Strategic range should be between 5 and 15. RPA should not exceed 5%. So the last part is regulatory authority is giving us the maximum, where you are supposed to invest on. As you can see, members, this is where our scheme was. The allocation of asset where it is, what is required, and as the strategic position. Then the next was the report from the property manager. We received a report from property manager giving us what was received from Ranangala, 16 million. And then the next item also, that is what was explained by the property manager. The next page. That there also some information concerning what is supposed to be done with Ranangala. And then GPU Mombasa. There was also a report from Mombasa giving the breakdown of what was received. And then the last one is, no, the second last is a report also from service provider, that is Lantana. Lantana Flat and Lantana Masionette, we received 11 million. And then there was a report from RPA members. The RPA confirmed that the scheme continues to operate within provision of the Retirement Benefit Act and applicable regulation framework. The authority noted that the trustees and the scheme service providers had maintained acceptable governance, administration, and reporting standards during the financial year. Then the last paragraph, the authority, however, highlighted concern regarding scheme investment structure, particularly the level of exposure to property investment. The RBA advised that retirement benefit scheme should maintain a balanced and diversified portfolio. Let's welcome the sponsor, PMG. Karibu sana. Karibu. And our service providers, karibuni. So karibu PMG. It's good to have the sponsor. You see, He's a sponsor and also a member of the scheme. He's a retired member of the scheme. So he's a member of our scheme. He has joined the senior members of the scheme and also a sponsor. So karibu. So we can continue, members. So I was on the report. I was reporting PMG. It's good that you have just arrived. These are the minutes for last year. So this is what you reported last year. So maybe, so the sponsors report, the sponsor acknowledged the important role played by the retirement benefits scheme in safeguarding employees' retirement benefit, reaffirm its commitment to supporting the long-term sustainability of the scheme, the changes within the postal and community sector and broader economic condition. The sponsor informed members that the effort were ongoing to stabilize the corporation's financial performance in order to enhance its ability to meet statutory and scheme-related obligations. Management continued to engage stakeholders and government authorities in seeking sustainable solutions to address legacy liabilities and funding pressures affecting the scheme. The sponsor remained committed to cooperate with the trustees, regulators, and service providers to implement measures aimed at improving scheme liquidity, addressing funding level, ensuring timely payment of members' benefit. The sponsor expressed appreciation to trustees, members, stakeholders for long continued cooperation and reaffirmed its support towards strengthening governance structures and securing future sustainability of the scheme for all beneficiaries. That was the report from the sponsor. And then after that, members, we had a session for the questions. That is the list of the members who attended, as you can see. This was a big list. That is the list of all the members who attended through either physical or virtual last year. Again, members who were there last year, is that what was presented by the trustees last year? What was presented last year? Who proposer?
My name is Matthew Mbani and I propose.
Seconder?
I second.
So that is what was discussed. As we continue, we welcome our members, the retirees. I can see Mr. Odingo from Kisumu. I can see Kajara. And other members, you're welcome. We are happy to see members coming physically because it's good for us to interact with members. It's a better time for us so that we engage and get the re-report. I know it is not easy to come from far, but it's important for us to attend physically. So you are welcome. Then let's go now to matter arising from what was presented. So there was the issue of fund value again. It was further clarified that the scheme financial position is expected to improve upon settlement of the sponsor application through proposed transfer of asset, because members were concerned of the decline of the scheme fund value. The next item is liquidity challenges and benefit. Members expressed concern over delayed retirement benefit payment and limited number of retirees receiving payments. Trustees explained that the scheme is facing liquidity challenges due to many employees who are joining as the retirees. And then again, simultaneously, there is an increased pressure on cash of resources. So, as you know, this scheme is a closed scheme. It is paying out. It's not receiving any contribution. So that is why it is facing a lot of challenges. The only money that they are using to pay is from the money generated from investment. Next item. There was also the question on actuarial services on procurement. So there were concerns from the members that why have two actuarians? But the trustees explained that the first actuarial version, which was to assess the scheme sustainability periodically. Then another one was a consultant which provide ongoing advisory support on investment and funding. Then the next one was the members also has raised concern asset disposal and investment strategy. That was the query that was asked by members to trustees. And then the trustees indicated that the investment structure is under consideration to better align asset maturity with anticipated retirement obligations. So that was what was given by the trustees. The next one, I think that was the end. So members, that is what was in last year's minutes. So members, as we want to continue, I would like to again welcome all members who have come. It's very important for all of us to be attending the AGM because this is the only day you can receive the report. This is the only day you can ask questions. That is the only day that we, the members of the scheme, can get what is the performance of the scheme, and then what is expected of trustees, the secretariat, and also from the members. So I know time is not on our side. We want to continue. So the next item on the agenda, Chair, I would like to invite the Chair to proceed from here.
Thank you so much. Tupigie makofi. Najua hiyo ni kazi ya Sawe. Ama nimechukua kazi yenu. Thank you so much. Allow me also to give apology from Elizabeth Shungula, who is outside the country on official duties. And Trustee Monai, I think our CEO sent him to Mombasa. So receive his apologies, but he's joining us online. Let's go to Chairperson's report. That is for the whole scheme. You can project. Yes, this is 24th Annual General Meeting of Postal Corporation of Kenya Staff Pension Scheme. Chairperson's report. It is with great pleasure that I welcome all members and all stakeholders to our 24th AGM. I'm honored to present the pension scheme report for the year ended 30th June 2025. The year ended was characterized by challenging investment environment driven by volatility in the equities market, persistent inflation, reduced government spending. These factors posed a significant hurdles to achieving optimal returns. Members, nevertheless, I am pleased to report that the growth momentum and positive returns recorded in the previous year was sustained during the year under review. This resilience reflects the effectiveness of our investment strategy and prudent financial management. Dear members, the scheme was closed to new members on 31st December 2009, and as such, it now operates as a closed scheme. All employees who were pensionable as at 31st December 2009 are members of this scheme, whether retired or in active service. The scheme has 2,208 pensioners receiving Kenya shillings 28 million from the scheme on a monthly basis. That is the monthly pension. The primary objective of the Postal Corporation of Kenya Staff Pension Scheme is to provide cash and pension benefits to members upon retirement and to offer financial relief to the families of members in the unfortunate event of their demise. We are pleased to inform our members that this objective was successfully achieved during the year under review. Payments totaling approximately Kenya shillings 441 million, that is in 2024, and 371 million were dispersed to pensioners and other members who retired during the period. This demonstrates the scheme's continued commitment to meeting its obligation and safeguarding the welfare of its members. Triennial actuarial valuation. In accordance with the regulatory requirements, the scheme is mandated to undertake actuarial valuation every 3 years to assess its funding status. The most recent actuarial valuation conducted as at 30th June 2024 confirmed that the scheme's funding level stood at 103%, 100.3%. This exceeds the statutory minimum threshold of 100% for the defined benefit schemes, indicating that the scheme is healthy, in healthy financial position. The 0.3% surplus reflects prudent and fund management, translates to approximate surplus of 14.379 million as at 30th June 2024. This reaffirms the scheme's ability to meet the current and future pension obligation to members. Property valuation. In order to determine the market value of its properties, the scheme undertakes valuation of its properties once every 3 years. The most recent valuation conducted as at 17 February 2025 indicated that the property value stood at 3.191 billion compared to 3.22354,670 billion as at 30th June 2024, therefore a decrease of 31 million. Strategic plan review. The scheme conducted strategic review to guide its operation and investment over the next 5 years. This strategic direction is designed to ensure sustainability, protect member benefits, and enhance long-term value for its stakeholders. The strategic objective is to grow the scheme's value to Kenya shilling 6 billion by the end of the strategic plan period. Next. Disposal, this is the strategic plan review. Disposal of properties. Proceeds of disposal will be invested in the financial assets that give higher returns. Operation efficiency and innovation. The scheme aims to improve internal processes, member service through the implementation of innovative systems and technologies, thereby enhancing efficiency and responsiveness to members. This is where we have our member service portal, self-service portal. Diversification, venturing into alternatives to avoid concentration risk and maximize on returns. There has been a rally on alternative investment in the sector. The scheme fund value decreased slightly from 4.8 billion, 4.803962,396 as at 30th June 2024 to 4.785149,976 billion as at 30th June 2025. The financial assets generated investment income amounting to 478,390,706 in 2024. That was for 2024 216,753,209. A growth that was driven by change in market values by 230 million. In 2024, it was 19 million. It's important to note that decrease in the portfolio value is in line with the scheme's closed status, as it only meets obligation through returns generated from the investment rather than contribution from members. We are not receiving any contribution. That is the fund value for 15 years, where we've grown in 2017, 2018, that is where we were at our maximum. Currently, that is 2025, that is the year under review, is 4.785 billion. Next. That is the portfolio distribution. We've got a smaller bit of offshore investment, cash balances, fixed and call deposits, local and regional equities, Kenyan government securities. That is where we've invested heavily. Investment property. It now stands at 66%. As at 2024, that percentage was 63%. I think it's due to the diminishing fund portfolio, the whole fund. So that is why that asset class with the investment property is, it keeps on increasing. We are doing as much to dispose. And there is a landmark ruling that was delivered last week by the Supreme Court that is exempting pension scheme from public procurement. And I think it now eases our work in disposing these properties. Next. Our properties, the current properties we own, that is Mombasa GPO, location Digo Road, Mombasa, which stands at 1.28 billion. Ronald Ngala building, that is at Ronald Ngala Street, Nairobi, 420. Lantana Mansionates, that is at Lantana Westlands, Nairobi, 1.1 billion. Riverview Apartments at Likoni Lane, Kilimani, Nairobi, at 385 million. Foi Karioko property, which is at Foi Township, Taita Taveta. I think this is the only property we got a best offer of 6.6 million. So we are processing that one currently. So the total value is 3.191 billion. Next. The Retirement Authority regulation require investment in property not to exceed 30%. As at 30th June 2025, the property portfolio stood at 70% of the fund value, and therefore, scheme was not compliant. To address this, the scheme has already initiated the process of disposing some of its properties with the aim of reducing the portfolio to within the regulatory threshold. Proceeds from these sales will be invested into higher yielding financial assets that will contribute to the growth and sustainability of the scheme. The challenges that we continued facing, they are court cases. In fact, when we advertised the Lantana Mansionates, the Lantana property and Riverview, some of the members went to court, so we are processing that. Low rental income, as compared to other portfolio, in these properties we receive, the rental income is low. Low occupancy, especially on the commercial properties. I think because of the age of our properties, it attracts low occupancy, but we are trying as much as possible. I think we are achieving at Ronald Ngala 100%. The one that we have not achieved 100% is the Mombasa GPO property. High maintenance costs due to the age of the buildings. That poses another challenge. Next. Way forward. Disposal of properties with low returns and invest proceeds on high yielding returns. Review of rents to market rates. This one we've been doing periodically. Once a tenant goes out, we renovate and increase the rent. So we are matching up, we are catching up on that, matching the market rates. Some have already been reviewed. Further improvement of processes through acquisition of relevant systems. There is an ERP system. You might have realized that it took long before we convened this AGM because the cash flow statements, that is a mandatory thing to show to the members statement balances. So we are trying to, we'll budget in the next financial year to acquire an ERP system so that the processes can be improved. Give more discretion to property managers in letting and managing the property. Yes, I would like to take this opportunity to express my sincere appreciation to the trustees who served alongside me, that is now Madam Suleika talking, during the year for their unwavering support, dedication, and commitment to the scheme's success. A special thank also goes to the following for their dedicated contribution to the scheme. There is the sponsor who is present today, trustees, all members of pension scheme to their continued trust and active participation. The secretariat, I think you forgot to introduce the secretariat. Led by the outgoing CEO and trust secretary, that is Elijah Goskei, for the exceptional leadership and administrative support. The scheme custodian, That is Stanbic Bank for their reliable and efficient management of scheme assets. Fund managers, that is the Sanlam and Old Mutual Group, for the strategic guidance and professional management of the scheme's investment. The scheme property managers, for their diligent and oversight of the property portfolio. That is both the residential and the commercial properties. The scheme auditor, MS Matengo and Associates. He normally says matters of emphasis and unqualified opinion. So the scheme auditors, that is Matengo and Associates, for their thorough and professional auditing services. The scheme actuaries, that is Samara, for the expertise in ensuring the scheme financial stability. That is the end. And I think I deserve a clap. Thank you so much. And again, let me say welcome.
A better clap, please. The summary, as I was sitting, we are in health financial position. They have done a wonderful job. Please put our hands together for a wonderful. We shall go for Nyayo because I belong to that team. So we shall go for Nyayo 1, 2, 3 for the wonderful work that team did, led by our chair Suleka and team. Please, twende pamoja, 1. Nasema Nyayo, twende Nyayo, 1, twende pamoja. They have done a good job. So that we call upon our brother Fred to come and tell us the other team. We shall see, we shall clap or not. But for now, let us put our hands together. 1, 2. Asante. Kazi mzuri. Sponsor na trustees na wale wengine wote. Asante sana. Bas. Karibu sana Fred Sienko kwa sehemu hiyo ya pili. Tusikie kama umefanya vizuri ama bado.
Thank you. Yes, let me greet you again. Good morning. Good morning again. Nice. We are giving the report for the new scheme. Now it is highlighted in our screen, but I'll go through it. It is with great pleasure that I welcome all members and stakeholders to our 16th AGM. I'm delighted to present the pension scheme report for the year ended 30th June 2025. The scheme during the year continued to face challenges. This is due to non-remittance of contribution from our sponsors, we all know, and of course the interest that has not been forwarded. The scheme, despite all these challenges, has continued to register growth, with the asset now growing from 1.311 billion, as was reported in June 2024, to 1.549 billion as we report today. The value of the scheme investment portfolio, of course, increased from Kenya shillings 1.3, as we have just indicated. That was in the year 2024. And as we speak today, it is 1.549 billion. Income made in the year 2025 was Kenya shillings 392,460,000. This one is a great improvement if we compared with 110,295, which was realized in the year 2024. And we attribute this increase to robust performance that was, of course, realized in the said year. On investment, the scheme was able to declare an interest rate of 18.76% on the remitted contribution member statement. That is as at 30th June 2025. This one, as you can see, it has doubled from 9.9, what we had in the year 2024. And this is, of course, very encouraging. Our scheme is really growing at a high and a dependable speed. Now the scheme will no longer print, this one we had said before, a physical statement, because we have our portal where member can access them. The status of the scheme, the graph is self-explanatory. We can see how we've been moving from, you can see from 2015 up to now 2025. Next. Now, the percentage in terms of holding on assets, it is well elaborated in the pie chart. When you look at the local and regional equities, you see the percentage they have. When you talk of corporate bonds, they are around 2.64. Treasury bonds, I think it's the one we're having, the largest, 76. Then the bond deposits, offshore and cash balances, they're well highlighted in the pie chart. That is as at close of 30th, 2025. Next. Now the status of unremitted contribution. Members, as you are aware, the sponsor has not been able to remit what it owes us due to reasons that are best known to the sponsor. Isaiah is going to explain. But we want to say that the court, we are aware, the court stopped the deductions. That was, that ceased from, of course, that was 2024. Those small monies that we used to get, I think every week, to a tune of 500,000, they also ceased coming. That one was due to the pronouncement of the court. Next. You can now see the difference on the status of the unremitted contribution and the payment as they are. Unremitted, we have 1.4 billion, and what has been received so far is 110 million. If you add that together with the unremitted balance of 1.2 billion, it gives us 1.4. Next. We have numerous challenges. One of those is cessation of contribution, where trustees had a robust discussion with the sponsor on the resumption of these contributions, but then the sponsor sought a clarification from the court, of which the court said that they cannot resume remitting the contribution until the matter which is in the court of appeal is pronounced and determined. The second challenge is the aging membership. Most of our members are approaching the mandatory retirement age and remitted contribution. And as we are all aware, the scheme has a live case in court with regards to winding up. Next. What do we feel are our way forward? PCK to resume contribution. Investments to be structured to address the liquidity needs. This one based on age profile. PCK to hasten the transfer of properties to offset the accumulated contribution. PCK to pursue the court case seeking to wind up the scheme with a view to ensuring the scheme continues with its operation. Consultation between trustees, the sponsor, that is PCK, now our current parent ministry, the National Treasury, are still ongoing to settle the matter with regards to the liability that we owe. In an effort to hasten the process of the transfer of the properties, trustees moved to court, as you are all aware, in 2017 to compel the sponsor to pay the unremitted contribution. So that pronouncement within the court is yet to be determined. The changes in this sector: one, tax exemption. As members, you know, the government is trying to review all operation parameters within the pension department. Yes. So all retirement benefits are now tax-free after the government exempted all the related taxes. Previously, we know people who had attained over 65 years were the only ones who were exempted. Now the exemption also applies to members who exit service after being in the membership of the scheme for more than 20 years. We have access to our benefits. The law has been amended to allow members who leave service to access a maximum of 50% of their accumulated balance within the scheme. That is now in law. In conclusion, the scheme, despite the challenges of the unremitted contribution, has been able to meet its obligation, and we expect the momentum to continue. I would like to appreciate the trustees who served with me during the year for their support and dedication. Finally, I wish to appreciate our staff from PCK, management, the scheme secretariat, the scheme service providers, the custodians, the scheme auditor, and the scheme lawyers for their immense support during the year. We would also like to thank RBA for understanding the situation faced by the scheme and working with us towards protecting the interests of both the sponsor and the members in line with their mandate. Lastly, we wish to thank all the members for actively participating in the AGM, and we reiterate trustees' commitment to ensure that the scheme is well managed for the benefit of its members, and that all efforts are being made to ensure the scheme continues to exist in the foreseeable future. Our report can be gotten from the link which is on our screen. Asanteni sana.
Thank you, Mr. Sirengo. And one thing I've recognized from Mr. Sirengo, he's cool, calm, and collected. Cool, calm, and collected. I will ask, were you a teacher by? Yeah. I hope your students pass your subjects. I want to believe they don't ask questions. If you ask questions after that, you are not concentrated. So we want to give again the new scheme. Tuwapatie zile nini za kilo, hata kama siko mbali na wewe Mr. Sawe, siko mbali, karibu WhatsApp group wetu zinashikana, but siko mbali. Let us just give Mr. Sirengo a hearty clap for what he has done. A very good presentation so that we can continue ahead. Yeah, 1, 2, 3, funga, fungua. Thank you, sir. Thank you, Mr. Sirengo. And I want to believe after all this, when questions come, you will also articulate your questions so that we can answer you promptly. We are going ahead, and now we are going to the meat. Presentation of the audited financial statements for the year ended 30th June 2025. Now we are able to bring people who are qualified for that job. Na hapa be very keen to listen to what we are going to be told about our money. We are here because of our money, and whenever you know your money works, you are able to know that you are not doing anything. I therefore want to welcome Mr. Kimathi, the auditor, to bring us our financial statement for the year 30th June 2025. Mr. Kimathi, please.
The chairman, trustees, service providers, postmaster general, and the members, good morning. It's my pleasure to be here today to present the audited financial statements for both schemes. And I will start with the owned scheme, which is registered under the name of Postal Corporation of Kenya Staff Pension Scheme. And for purposes of this presentation, I will be able to highlight 4 major areas. That is the membership, income statement, balance sheet, and the cash flow statement. I will start with the page number 7. Page number 7, let's go there. It's supposed to highlight the total members of the owned scheme as at 30th of June year 2025, who stood at 3,425. And out of that, active members were 892, defunct members 217, dormant members 108, and the last 3 pensioners and independents, we had 2,208. So what I want to highlight here is that you can see that the total number of pensioners formed the largest composition of the total members of the owned scheme. Let's go straight to the income statement on page number 13. This is supposed to summarize the growth which was generated in that year. And I will start by highlighting that in that year, the total members who left service and out of the monthly pension which was paid out in that year, the scheme incurred an expenditure of 441 million, which compares with 371 million in the previous year. It means that the scheme was able to achieve the higher objective in that year. In terms of investment incomes, the scheme was able to generate investment income of 321 million compared to 271 million in the previous year. So members, you will understand that the scheme was able to generate more investment income. Change in fair value of financial assets. In that year, the assets generated a fair value increase of 230 million compared to a loss of 19 million in the previous year. Change in value of investment property, there was a decline of 40 million, and in the previous year, there was no decline because the valuation was done in year 2025. Investment expenses, for the year 2025, the scheme incurred that 3 million compared to that 5 million in the previous year ending June 2024. So members, the total net return on investments for year 2025 amounted to 478 million compared to a lesser amount of 216 million in the previous year. In terms of admin expenses, in year 2025, the scheme incurred an expenditure of 77 million compared to 78 million in the year ending June 2024. So members, at the end of the year, in terms of growth, in June 2025, the scheme experienced a negative growth of 40,404,258. But in the previous year ending June 2024, the scheme incurred a higher negative growth of 233,710,727. So basically, we mean that the scheme was able to improve its position in terms of the net assets available for benefits. The next statement I want to present is the balance sheet of the owned scheme, which is supposed to summarize all the assets and liabilities for the owned scheme. And out of the total scheme assets of 4,785,149,976, intangible assets comprises an amount of 125,000. Property and equipment which are held internally in-house amount to 3 million. Investment properties, 2,270. Current liabilities for the owned scheme as at the 30th of June 2025 amounted to 98,322,260. So members, at the end of the year, the total assets which trustees of the owned scheme were owning on behalf of the members for the single objective of paying benefits, their market value amounted to 4,785,149,976. And you can see at the bottom of the page, the trustees of the owned scheme didn't confirm that those were the total assets they were holding on behalf of the members for the purpose of ensuring that there is enough funds to pay their benefits when they retire. The last statement I'll be presenting is the cash flow statement on page number 15. This cash flow statement again goes along to confirm that the scheme was liquid enough to meet all its obligations, especially for payment of benefits within 13 days as per the law and within 5 working days in accordance with the internal policy, such that at the end of the year, the scheme total bank balances amounted to 149,824,718. I will not present the other notes from page number 16. In your own time, kindly go through those notes so that you can be able to understand all the activities, all the financial transactions which were carried out by your trustees in that financial year. I will stop there for the presentation of the owned scheme financial statements. I will now kindly invite the owned scheme external auditor, Mr. Matengo, to come and present his opinion.
Chairman of the two schemes, representative of the sponsor, the Postmaster General, trustees, members, good morning. It is indeed a pleasure to be in front of you here once more. I'll not take much of your time, but I'll be very brief in terms of my presentation. But before I start my presentation, I would just want us to go to note 13 so that we appreciate the origin of some of these figures. I know my colleague has read them. So page 13 if you are there. When you're on page 13, the most important thing that you need to appreciate is that in terms of the performance of the scheme, there was an increase in terms of its performance, because when we talk about the movement in the net asset, basically for some of you who are accountant, should appreciate that this is like what we used to call the profit and loss account. And if you could see the increase and decrease in net asset, the increase and decrease in net asset for the current period was a little bit lower than what was there in the previous period, which means in terms of the investment portfolio or in terms of the investment opportunities that the scheme trustees got into was more profitable than what was there in the past. Because if you look at 233 as a loss for the previous period compared to the loss for the current period of 40 million, which is very encouraging. I would also want to state that in terms of the performance of the scheme, generally the value of the assets went down. We have seen that from even the speech that was read by the chair. Because of the increase in payment, you have seen the increase in payment from 300 to 441. Though there was some valuation of assets, I know the valuation The valuers normally have different methods in terms of the asset valuation. You have seen from that statement the valuation of the asset, the value of the valued assets went down by about 40 million, about 30 to 40 million. So that is what I wanted to say. Having said that, I would say that I would just want to give our opinion, but it's also good for members to appreciate that as auditors, we rely on the statement that has been prepared by your team, the trustees, and that statement is covered under what we are calling the statement of statement of trustees' responsibility. The statement of trustees' responsibility is under page 10, which really gives the trustees the mandate to give us the books. Ours as auditors is just to make a comment on the opinion. And we have made our opinion, but before I read the opinion, though it's an unqualified opinion, I would want to state what has been stated by the chair, that if you look at the opinion under page 11, not under matters of emphasis of matters, what are we stating? We are stating that the financial, under note 13 of the financial statement, investment of the schemes were so what basically we are stating is that the scheme investment goes beyond what RBA allows. It's about 65.9%, which is much higher than what RBA allows. And then number two, the investment property has a low return. It was a pleasure to hear from the chair of the old scheme mentioning of some of the strategies that they need to undertake in terms of trying to improve the return. So based on that, then I would go to second paragraph on the same page so that I don't take a lot of your time. What we are just basically saying is that in our opinion, the accompanying financial statement gives a true and fair view of the statement of financial transactions of the scheme during the year ended 30th June 2025 and the disposition of the state of asset and liabilities in accordance with both the FRS and the Retirement Benefit Authority. So basically that sums up my presentation for today with regard to the old scheme. What I can say about the old scheme, there is hope, but I think if you look at some of the assets as been spoken by the chair, they need really to turn them into assets that are more yielding. Because if you look at the rent, it's tying a lot of your funds into old properties that are not more yielding. So basically that's what I want to say for the old scheme. Asanteni sana.
Thank you, Auditor. I'll now switch over to the next scheme, presentation of the audited financial statements, which is registered under the name of Postal Corporation of Kenya Staff Retirements Benefits Scheme. I'll take a similar format in terms of presentation, and I will start with the membership of the new scheme, which is covered on page number 7. The total members of the new scheme as at 30th of June 2025 were 3,153. And out of that, active members who were in service were 2,029, defined members 441, and dormant members 683, bringing the total membership of the DC scheme to 3,153. Let's proceed direct to the income statement, the next presentation. This is a statement which is summarizing all the incomes and expenditures which were generated and incurred in that year respectively. And I'm happy to report that for this scheme, the performance was very much encouraging because of the nature of its assets. In year ending 30th of June 2025, the scheme generated a positive growth of 212,969,777, which compares with a smaller growth generated in the previous year of 26,387,491. So what the attributes for this significant growth is as follows. During that year, the scheme was able to receive contributions from the sponsor amounting to 19 million. Then in terms of payment of benefits, the scheme paid a higher amount of 159 million compared to 98 million in the previous year. Return from investments, the total investment generated in that year of 12 months ending June 2025 amounted to 392,460,576, which compares with that smaller investment income of 110 million in the previous year. So members, you realize that the investment income almost tripled. In terms of expenses, and mean expenses which were incurred in that year for the new scheme amounted to 21 million, which compares favorably with the previous year, 21 million. Staff cost, 17 million, compared to a lower amount of 14 million in the previous year. Tax expense for the unregistered scheme, the scheme was able to incur an expenditure of 522,547,000 compared with the 249,200 in the previous year. So members, that is the composition of the total growth generated in that year of 212 million, and it is on that basis that the trustees were able to declare an interest rate of 18.76% to be credited on the member statement balances. Next statement is the balance sheet, which is supposed again to summarize all the assets, all the liabilities, which the new scheme trustees were holding on behalf of the members for the sole purpose of having a fund to pay their benefits. The largest asset of the new scheme is investments. These are the financial assets, which like treasury bonds, equities, deposits, and the rest. The total market value of those financial assets as at the 30th of June 2025, their market value was 1,551,261,457. In the previous year, the market value of those investments was 1,311,607,053 Kenyan shillings. And again, that one is within the environment that this scheme does not receive contributions, and the fact that trustees were able to, again, enable the scheme to grow, given the positive investment environment. The next category of asset is the current assets, which amounted to 82,827,437. And the largest asset of the current assets was the cash and the cash equivalents, which totaled to 78,330,524. Current liabilities totaled to 84,403,658, and the largest component of the current liabilities were the unpaid benefits, which amounted to 84,276,454, and that element was paid in full in the first month of the next financial year. The total net current assets as at the 30th of June 2025 amounted to negative 1,576,221. So members, as at the 30th of June 2025, again, I want to confirm that the total market value of the assets which trustees of the new scheme were holding on behalf of the members amounted to 1,549,685,206. And all the trustees of the new scheme did confirm by signing that statement on 24th of September, year 2025. Page number 15, that is the cash flow statement, which again confirms that the scheme was liquid enough to meet all its obligations, especially payment of benefits to members as they retire. And again, I want to confirm that as at the 30th of June 2025, the scheme bank balances amounted to 116,860,646. I think from page number 16 again, in your own free time, go through those notes so that you can be able to understand in a deeper way all the activities, all the financial transactions which were carried out by your trustees in that financial year. I think I'll stop there. I'll now again invite the new scheme auditor, Mr. Matengo, to come and present his opinion.
Thank you so much, Bwana CPA Kimathi. I think in terms of the presentation of what Kimathi has given us, he has elaborated a number of the issues. I don't need to go back again on them. But what I would say is that in terms of the growth of the scheme, from the previous period to the current period, that was around 18% in terms of the asset base of what was there in the previous period to the current period. One of the things which is quite conspicuous in terms of the accounts, if you go to page 13, I think the chairman also talked about it. It's just good to appreciate how it impacted on the flow of funds. Page 13, you would see in terms of what was expected in note number 5, what previously the scheme had around 51, what they had received from the employer, but in the current period, they only received 19 million. This up to 19 million was received up to the period of December 2024, which means from after December 2024 to the time that these accounts were prepared, there was no subsequent inflow coming from the employer. So in terms of our opinion, let's go to page 11. I just want to highlight some issues which we had covered under matters of emphasis of matter, such as it's good for members really to appreciate what happened. Number one was that we are saying there was a judgment of the Court of Appeal that stopped. I think the chairman had alluded onto it. We saw it as a material factor that needed to be stated in terms of the going concern of the scheme. Number two, because of that, the employer contribution during the period was not remitted, nor the actual amount due availed for consideration in the financial statement. In the past, what were we doing? Because we knew how much was supposed to be contributed, and we all appreciate, I know a number of you are accountants, we work on a concept called accrual concept. So we were trying to accrue what was not received as part of income. But because of that court judgment, we also stopped. It stopped in terms of the management, in terms of accruing that. So bullet C is that we are saying up to date, up to the time that this accrual was stopped, the scheme was being owed 2.45 billion, which means this is really an amount that creates a lot of challenges in terms of the going concern or the scheme. It really creates a lot of going concern of the scheme, even though the scheme has diversified its investment in other areas, which we have seen from the reading that was done by the finance manager. There was a growth of about 18%. Number four is that it's what we are calling in our auditing language is an event that happened after the balance sheet, what is called post-balance sheet event that is covered within the standards. So we are saying, because it's likely to impact the going, because it was an issue that was taken, this is an issue that came from the previous period, but come this current financial year, 2025-26, it's an issue that is likely to impact on the fund flow of the scheme. There was a court had set an amount of 60 million as part of the guarantee, so that this amount was placed in a separate bank account. So it is important for scheme members to appreciate that, because sometimes they might wonder why the scheme experiencing some liquidity issues. So those are some of the issues that are important for members to appreciate and know. Based on those issues, I think I'd mentioned earlier, these accounts had been signed off by the scheme trustees, and we have given our opinion, as we have said earlier, under note the same page on paragraph 2, we have given our opinion. And then lastly, these accounts, the opinion have been signed on page 12 by FCPA Matengo, practicing number 2061, because it's a requirement for us also to state our practicing number so that you know who has signed those accounts. I think briefly that is what I wanted to state in terms of the performance of the new scheme. In terms of future, it has its future, it's progressing well, but some of those teething problems which came out from the books and also has been alluded by the chairman needs to be addressed. Na vile wa politician wanasema kwa hiyo machache, asanteni sana, and God bless you in the subsequent discussion you are going to have. Asanteni.
Asante sana Matengo and Associates. Umemaliza? Asante sana. Please, we are liquid. In other words, so we are only praying that they will continue like this and grow more from 1.3 billion to 1.5 billion. That means we are growing. Please, makofi kwa watu wote ambao wamefanya kazi mzuri. Asante sana. So tumemaliza sehemu hiyo. Basi tunataka tusimame, tumekaa sana. Naamini my brother will have something to tell us if we can go some press ups. Basi tusimame sisi wote. Alafu let us congratulate one another as for the reports, for the financial reports tumesikia, balance sheet tumeona, liquidity iko sawa. Salimia mtu karibu na wewe, mwambie congratulations for the work done. Yes, hata mimi nimepata opportunity. That is great. Make sure you go side by side. Peke yako. And do a lot of smiling. In this age we're in, do a lot of smiling. Take a lot of water. Eat food. Usingoje mpaka uchoke ndio ulale. Lala. Sasa umesikia kulala. Asante sana na ndugu yangu karibu. Congratulations. Hata wewe nasema congratulations. A good work, well done. This is great. Asante sana.
Thank you very much. We just, because of our time, thank you. We can be seated. In the process of having just a few words here and there. First, we want to again welcome all our pensioners. We are here because of you. The records are here because of you. And all those who are wako karibu kwa retirement also get note of what you are being told. And in the process, I want just to share some 5 quotes that relate to pension or retirement. If you get one, write it down and move with it. One of the quotes that have been written by Dennis Whaley, he says, chase your passion, not your pension. Chase your passion, not your pension. You may miss your pension if you forfeit your passion. Another one written by Abel Lemons, he says, the trouble with retirement is that you never get a day off. The moment you go into retirement, hauna off day, you continue moving. Usema, mimi naenda retire, naenda kupumzika. You don't have a day off. You continue moving. George Herbert says, pension never enrich a young man. Pensions never enrich a young man. A young man should work for today, very active today. Pension will help you when you're already old. Pensions never enriched a young man. Somebody called Bill Lugoi says, I don't have a dime left. I am dependent on my friends for food and a small old age pension. I don't have a dime left. I'm dependent on my friends for food and a small old age pension. Why, ask yourself, why does this person have some old age pension? Na ni kidogo. He never invested well. Number 5, the universe is like a pension plan. It will match your interest. It will match your investment. The universe is like a pension plan. It will match your investment. Your investment will determine your pension. So, young men and women who are 30s, 40s, mkiona hawa, acha nitumie sheng, nikiona hawa wazee wamekam, they invested well. They invested well, and they invested in time and money. Money makes the world go round, yes, for today. But do you think of what comes tomorrow? Even as I close and start to welcome the fund managers to come and tell us of their opinions, I want to tell us a story. And when I came here today, I asked the DJ, how many national anthems ako nazo? Akaniambia 2. Nikamuuliza, you don't know, you don't have the national anthem for Arsenal? And he laughed. I wanted us to play 3 anthems. The national anthem for Kenya, the anthem for ESC, and the anthem of Arsenal. Why? In a trend. But I want to bring a story on that. One of the things that the Arsenal team believed in is process. Process. And pension, your pension is like a process. You have been employed at 21 years of age, and then somebody tells you, go to the pension scheme. And then you ask, for how many years? For 30 more years you want to save. It is a process. Trust the process. If that team could not have trusted the process, when that team last held the trophy, but now they are the current ones, 22 years, they couldn't have celebrated the trophy the way they celebrated, because they trusted the process. It is the same thing like the pension. Trust the process. When it goes high, don't withdraw. When it goes low, don't withdraw. Trust the process. I just want to challenge us not to join my team because I'm an Arsenal fan, but trust the process. Don't go and say, I can't be a member of any pension scheme. We have 2 pension schemes, and by the way, we are still recruiting anybody who has not decided to become a member. Come and see me after the meeting, and I'll give you the papers and you recruit. And I know I'll get some benefits from there. So welcome again to City Square. I want to welcome my CEO in terms of SACCO, Madam Deke. Welcome. Welcome to City Square, and I hope you are getting some things. And from this place, you'll get members. We are working on getting members for our SACCO. I hope they have not heard. We are getting members from our SACCO also. Thank you very much for every member, the pensioner. And I want to welcome specifically those pensioners that have been born in this month. I want to say that this month carry very important people in this world. Very important people, me included. Hiyo ni kujitetea ndo mjue nilikuwa na birthday, and you can send any number. My number is active. Haina fuliza. How many people are born in May? How many people are born in May? Just stand up, kindly. Thank you very much. You are an important person. You are an important person. Anybody born in May, you are an important person. Why am I saying this? Number 5 is the number of grace. You are fully gracious, and the grace of God is upon you. And I want to tell you that God will lift you up even more. Simonipigia makofi. Thank you very well. And I hope you've gotten something. I hope you've gotten something. The young people, pension never enriched a young man. Mr. Sawe, I welcome you.
Moja kwa moja mpaka kwa fund managers, and we are calling upon our brother Harrison Kamande. Please take your position and give us the report on our funds. Karibu sana. Makofi kwake anapokuja. Asante sana. Halafu tutaenda kwa mwenzako.
Good morning, chairman of the two schemes, trustees, fellow service providers, and members. Good morning. So my name is Onassis Ndegwa and not Harris Kamande. I'm here representing All Mutual Investment Group, and I'll be taking you through our presentation. First and foremost is to talk about the role of the fund manager. Then we'll talk about the economic environment, the asset allocation, and then the outlook will be done by my colleague in the industry from Sanlam Allianz, Lillian. So essentially, the role of the fund manager is on advisory. So we advise the trustees, particularly on investment options. So where are we going to put the money? And then we also ensure we are complying with the IPS and the RBA regulations. So we do take the funds given to us and we invest that on behalf of the trustees. And for us to do that, we conduct research and construct a portfolio that is ideal for you. Then we also do a report back to the trustees about that the scheme is performing, and then ensuring we are complying with the regulations. Briefly talking about the economic environment, and this presentation is up to the year end of June 2025. So 2024, there was a slowdown, and in terms of GDP, and you can see the graphs indicated on the screen. From 2021, there's been a slowdown. However, there's a bit of pickup in the first half of 2025 from 4.7 to 4.9. Next slide. Then this is on inflation in terms of purchasing power, a bit of movement on that from 4.6 in June 2024, and it came down to about 3.8% in 2025. In 2026, Lillian will be able to talk about how the fuel crisis is impacting inflation. Then on interest rates, you can see the yield curve movement on the short end on the 1 year to about 7 year. There's been a bit of movement on that front, but on the long end, there's a bit of stability. This normally affects your bond portfolio. And then on equities, again, it's good we do have graphs showing you different years. This is a bit volatile portfolio that you have, but it's quite small given that the bonds is about 76. And as you can see, members, 2021, it was a good year, followed by 2 bad years of -23 and -27. We did not lose hope. We still continued to look at the market. Remember, this is the performance of the entire market. For us, we have select securities therein, so we are not hit by the extent of loss, but we ensure that we give you a good return better than the market. So 2024, a very good performance of 34%, and then for the 10 months of 2025, when we prepared this, it was up 52.5%. Then in terms of asset allocation, which there are 2 values which have been combined between ourselves and Sanlam. You can go to the next slide. We just ensure that we are complying with the asset allocation provided in the IPS and ensure we are not exceeding the limits given by the regulator, RBA. I'll call upon my colleague to come and talk about the outlook for 2026. Thank you.
Thank you, and good morning once again. My name is Lillian Mikali. I'm the portfolio manager. Here on behalf of my colleague Yvonne Munyambo, who's the primary portfolio manager. In terms of the outlook, what we expect on GDP is stability. And this is for the financial year, the reporting financial year of the scheme, which ends next month, June 2026. So the outlook I'll speak about is that, and then the next reporting period, given that we will be starting a new financial year in July. So in terms of GDP, the outlook is stable. IMF expects about 4.5%. The Central Bank of Kenya had a guidance of about 5%, and that's mainly driven by interest rates dropping, which supports private sector credit growth. There are risks to that, such as geopolitical tension, and we've seen what has happened in the Middle East with the US and Iran conflict. But the good thing is, for the financial year ending June, we had about 9 months of stability prior to the onset of the conflict in March. In terms of inflation, that remains stable. It's still within the central bank target of 2.5% to 7.5%, but we could see that go up. And the main reason for that is our fuel imports will go up. That's about 30% of the inflation metric. And as a result, we've actually seen inflation go up slightly to about 5.6% for the month of April. Reserves of about 13.5 billion, which is sufficient to support our currency as a nation, in as much as we're a net importing country. On interest rates, as I said earlier, because of rising inflation, also the interest rates are expected to go up. But for the financial year that will be ending June, we saw a drop in the interest rates, and that has been beneficial to our fixed income book in terms of performance. Lastly, on equities, the market has continued to do well. So essentially, we've had about 2 to 2.5 years of good performance, and that's mainly driven by increased local appetite as opposed to foreigners who in previous years, I'd say about 5 years ago or 10 years ago, they were about 80% of the participation in the market. But right now that has come down to 40%, and we're seeing more local funds participating in the equities, and that is supporting the market and protecting the market from flight of capital. Lastly, the stocks that are in the equities market are good. The performance has been improving, and the dividends has also been growing. Thank you very much, and I'd like to hand over to the MC.
The main word here is stability. Stability. Are we stable from that team? Yes, we are stable. So okay, let's go one by one to the custodians. Have we finished? Any fun? Tumemaliza wote. Asante. Basi custodian report. Nicholas Mushoki. Nafasi ni yako. Karibu sana. Makofi kwake anapokuja. Asante sana Mushoki. Give us also your report.
Thank you. Good morning, Chair, trustees, members, service providers. Good morning. Good morning. Good morning again. Good morning. God has given us the opportunity again to meet this year. I was standing here last year. I went through the custodian report. I'm feeling like I just ask you questions because year in, year out, we have been discussing about the custodian report from Stanbic. So my name's Nicholas Musyoki from Stanbic Bank. We are the custodians of the DB scheme. I don't want to call it odd scheme. The DB scheme. So I will go through my agenda, starting with the overview. Last year I said we are heavily regulated. That's why you can see service providers here are many. We have 6 regulators. 3 key ones are Central Bank of Kenya, and they said Central Bank of Kenya because globally a custodian must be a bank, right? RBA, because we deal with pension funds. CMA, because we deal with financial instruments. So if you look at the financials which have been read by the auditor, you'll see capital markets instruments which are stated there. So that's why we are also regulated by the Capital Markets Authority. We are together up to there. RBA, CBK, and CMA. Those are the main regulators. Now, authority has been given by the regulators for the depositories, the different depositories. For equities, we have CDSC. For central bank, CDS, we have, for government securities and T-bills, we have central bank with another hat of as depository. So that is also our regulator. Now, those transactions must go through again with through another regulator. It is regulators all over, through the NSE, the Securities Exchange. So that's where the exchange is done, and CDSC keep the records, all right? Sawa. Today is 26th. We are meeting with the members. So we meet once in a year to meet the members. Every 3 months, we meet trustees. This one's here, all right? With these service providers, they ask us very hard questions. We give reconciliations. We give reports. We give information to the trustees. So information all over. Plus those regulators, all of them, we also give reports. On a monthly basis, weekly basis, half-yearly, and every year. Or even they can just knock into a service provider, into a custodian, into a fund manager, and ask for reports. So reports, regulation, all over, all right? So I can confirm today, and again I confirmed last year, and even the previous year, that this scheme is registered by the RBA, and we have the registration certificate as a custodian, because we have to look after your assets, all right? This scheme, and I'm talking about the DB scheme, what you are calling the old scheme, as a trust deed. That trust deed reads into the act. We can go to the next page. This is what I'm talking about. That's how we are structured. Client there is the DB scheme, all right? So we have the client there, what we call the Postal Corporation Staff Pension Scheme, which has an account at Stanbic, only one account. So you are hearing that from me, only one account. You've seen the fund manager here, you've seen the auditor, you'll see the administrator, etc. But there's only one account at Stanbic for the DB scheme. So that account is where we get maturities, purchases, sales, everything passes through. If there are contributions, they come to that account. Now, that account is protected. And I want to repeat, it is protected, right? Ring-fenced by the custodian so that it's a different entity from the sponsor, all right? A different entity from the sponsor, it's called what? PCK Staff Pension Scheme. We have a registration certificate, so it's a different entity from Stanbic. It's a different entity from PCK as a sponsor. It's a different entity from the fund manager and everybody you can see here. So it's independent. So your assets are ring-fenced. Now, between yourselves and ourselves, we have a custodian agreement. Between yourselves and the fund manager, there's another agreement. So every service provider, even the auditor, they have an agreement. So I can confirm we work in a structured manner, right? Now, between ourselves, because money has also to move for investments, for payments, etc., we have service level agreements, all right? So how that arrangement reads into the trust deed, which reads into the Act, the CBK Act, CMA Act, and RBA Act. Sawa, we are together up to there. Next one. This is my second last slide, right? Now, the role of a custodian, and I know KCB will be coming here to make their remarks about the other scheme. We make sure that whatever has been decided by the fund manager through thorough research, under decision to buy, to purchase, or to sell, those assets, they come for them in Stanbic, right? For the DB scheme. So whenever you go to a mall, a supermarket, you do your purchases, you pass through the cashier, you make sure that you go home with a basket, put it in the fridge. If you buy meat, milk, fish, you make sure that you protect. The custodian role is to protect. But remember, we passed it through the cashier to pay for it. So whenever a fund manager makes a decision to acquire assets, simultaneously we pay for it, but we don't give out the money without the assets. Okay? You can just close your eyes and look at yourself in the supermarket. You select, you pass through the cashier. You pay, but you go with it, isn't it? But you protect that through the fringe, right? Protection is key for the custodian. So number 1 and 2 go together. Safekeeping and settlement. You invest to make money. So whenever you do your investments in government securities, you make what? Interest. Whenever you invest in equities, stocks, shares, you make dividends. So the custodian role is collect all that and keep it back to the. Hiyo ndio maneno tunaendanga kwa meetings to assist the askers. Where are the dividends? Where is the interest? Where are the assets? Those are the questions they ask us. So it's one of our roles. Lastly, I said reporting. Reporting is very key, right? So we also do reporting. So you can go to the last slide, which is a confirmation of what you've heard from everybody here who came here. And remember, we are the custodians and we tell the truth, all right? The previous one, that one. So those are the confirmations which I want to make, all right? And the custodians are banks and we not lie, all right? So we are telling the truth. I didn't say the other ones did not say the truth, but this is what I am confirming, that whatever you saw in the financial accounts, I can see now you are looking at me clearly. Eh? Whatever you saw in the financial accounts is the truth, the naked truth. All right? Whatever you've heard from the fund manager, whatever you've heard from the accountant Kimathi here and the auditor, we can confirm we as custodians were enjoined and we participated in those financials. They came to our offices, they checked what we are proclaiming today here, that we are keeping the assets. I can confirm we gave statements, we gave a list of what went out, what came in, the expenses, etc., and all the reports which we gave out. So I can confirm that it is the truth. Thank you. And back to you, MC. Thank you.
That statement is truth. Our money as their custodians safe. Moja kwa moja mpaka kwa ndugu yetu Mbuvi. Michael, karibu sana. Makofi anapokuja tafadhali atupatie yake pia, labda ni KCB, atuambie yetu ya Stanbic Bank well taken care of. Safe keeping kama supermarket, huwezi kuchukua tu.
Thank you. Board of Trustees, the sponsor, and members, good morning. My name is Steve Langat, representing KCB Bank, the custodian for the new scheme. As my colleague has said, what we do, our reports are msema kweli. We report what we have in our custody for the scheme. I don't want to repeat what my colleague has presented. We can go directly to KCB confirmation, page 10. Just to confirm to members that the assets of PCK are maintained in our safe custody. We receive contribution when the sponsor remits. All the investments are executed as per the fund manager's instruction. reporting on the asset held under custody was carried out to the trustees as per the RPA regulations. And lastly, and most importantly, the assets that we are confirming are, as presented earlier by the auditor and the fund manager. Thank you. Back to MC.
From KCB, as our custodian, our money is also safe and we are grateful. Basi, twende moja kwa moja mpaka actuaries, na before that, there is a gap ambaye haikupeana report, tunataka kuita Ndegwa, alichelewa, lakini ameingia. Karibu sana Ndegwa, utupatie report yako ya the department you are.
Thank you. Postmaster General, chairs, trustees, fellow service providers, members, good morning. My name is John Degwa. I work for ICA Lion. We are the fund managers for what is being called the new fund, which is ideally the DC. My predecessors have given a fairly good sort of like background, the sort of investment environment we're operating in. And they've also given an outlook, and I feel we are very much aligned. I will not belabor that point. What I'll do is I'll just give a brief of the fund as it is. So the fund continues to grow despite the various challenges that have been highlighted, key of which is one, lack of contributions, and two, huge member benefit payments. For example, the year we are reviewing, we paid out around 160 million. You saw we received only 19 million. So at scheme level, the scheme is taking out more than it is putting in. However, because of the quality of the investments that we've made, we're able to generate around 197 million into the fund, which is new cash into the fund, and that is what supported the payments that we did. As of June 2025, the scheme assets stood at 1.55 billion, a growth of 26.5% from the previous year. I know it was declared there was 18, but at fund manager level, what I was able to generate was 26%. The biggest driver of that growth was our equity allocation. Shares did very well during the period. For our fund, the shares were up over 50%. Therefore, we benefited from that. From an asset allocation perspective, the fund is 76% in government bonds, 20% in equities, and the balance is in money market instruments. Just to give an update where we are now, that is June 2025. So as of April 2026, the fund has since grown to around 1.68 billion. So we are seeing a consistent growth in the fund. It's also important I mentioned that the fund is fully compliant on all internal and external guidelines, particularly the RBA guidelines. As discussed earlier, and as I finish, we are pursuing an investment strategy given the challenges that we face that will help us to continue growing the fund. And we have three strategies. Number one, we are increasing allocation to fixed income assets, predominantly government bonds and bills. We like bonds because they pay us regular coupons, and these are the coupons that we use to further grow the fund. Number two, we want to gradually reduce our equity allocation. The market has done fairly well, as mentioned, 2 years in a row. We think it's time as a fund we reduce our allocation to that. We want to cut it by half from the current 20% to around 10%. The third is that the first two, increasing allocation to government bonds gives us coupons, cash. Selling stocks that we feel have done fairly well also will give us cash, and is that cash that we'll use to reinvest and continue to grow the fund. That is it from me. Thank you.
Asante sana Mr. Ndegwa, tumeona pia is doing a good job. Let's go straight to Beryl Lewis, who is going to present an actuarial report. So from Samara, Please, karibu sana, chukua nafasi yako. Tupatie ripoti yako juu ya the accrual.
Postmaster General, trustees, ladies and gentlemen, good morning. Good morning once again. My name is Luis Rapando. I work as a senior investment consultant with Zamara Actuaries, Administrators and Consultants Limited. I'll be taking you through our report today. I'll start off in terms of what I'll cover. I'll just a brief overview of what or who Zamara is, what we do for the scheme, some small scheme commentary, and then finally we'll take questions during the Q&A session. So starting us off on who Zamara is, we are a Kenyan company, currently serving over 700 corporates. We are a financial services company, and we are a company with Pan-African ambitions, and currently in 7 African countries, looking to expand into 14 other companies and other countries. We have a global partnership with MASA, which enables us to have a talent management and employee benefit system. In terms of values, very simple, we have the acronym SET, SET, which means simplicity, empathy, and trust. Our higher purpose is just to ensure that we want to create a financially secure and prosperous society. In terms of services that we offer, actuarial services is what we are mostly known for. However, we also offer pension administration services, insurance and reinsurance brokerage, and then for the individual member, we offer wealth management and financial planning. In terms of involvement in the scheme as actuaries and investment advisors, we liaise with the regulator, this being both the KRA and RBA on scheme matters, so assist the trustees on that. Assist the Board of Trustees with any technical aspects of the defined benefit scheme. So as actuaries, we are required that once in 3 years, as the scheme prepares your actuarial valuation report, actuaries come in and determine the liabilities and the funding level. So as your actuaries would come in and assist the sponsor and the Board of Trustees on any technical aspects that concern the scheme. We have other technical issues that we assist the scheme with, this being benefit computations. So just for the defined benefit scheme, ensuring that the computations are done correctly and the members are paid in line with current regulations and also in line with the trust deed and rules. And then lastly is also miscellaneous advice, this being advice on things that the trustees want to implement, but they want to see the impact to the scheme upon implementation. So things like checking the cost of pension increases, what regulation changes, what impact that will have on the scheme, then the scheme will require the actuaries to come in and advise on the same. So a brief look at the scheme, and your fund managers have already mentioned the scheme performance. This is just to highlight for the DB scheme where we were as at 30th June 2025, looking at the quarter, 12-month, 3 and 5 year performance, you can see that as at June 2025, as has been mentioned by the fund manager and also by the chairman, performance at that period of time was good, and that is majorly what enabled the scheme to grow over the 1 year to June 2025. The next slide looks at how we've maintained the assets. A comment here, members, is that our assets have remained largely stable in the last 1 year. What we like to highlight is that a big chunk of our assets still remain properties. And even though there is this growth, we want to ensure that we as a scheme get liquid assets such that we are able to continue to pay the members their benefits as and when they become due. So assets largely stable, but as a scheme, we really should look towards reducing the property element that we have and ensuring that we secure benefit payments for us into the future. I will stop there and hand this back to the MC.
Thank you very much, Samara. They are doing a good job A hand of applause, please, for Samara. Thank you very much for doing a good job kwa kupatia ripoti hiyo. Basi tunaenda moja kwa moja mpaka property managers. A representative to come from that department and give us his report. I thought you were coming. Haya, please. Karibu sana, our property manager. You tell us your name and then you can be able to present.
Chairpersons, trustees, Postmaster General, fellow service providers, members, good morning. My name is Shaka Kimathi. I am representing Kiragu and Wangi Limited. We are a registered property management and valuation firm, and we are also the appointed property managers for 2 commercial properties, that is Postal Pension Tower, Mombasa, GPO building, and Ronald Ngala Post Office building, which is in Nairobi, along Ronald Ngala Street. So just as a property overview, number 1, we'll look at Postal Pension Tower, Mombasa. Our role here, of course, is to ensure our collections are at the highest that we can, which of course generates revenue for the property. And one of the other main agendas is to ensure that the occupancy in the building is at 100%. Can go to the next slide. So in terms of financial performance, the total receipts received were 35.27 million, total expenses 6.28 million, and the net income 28.98 million. In terms of receipts and expenditure, in comparison to the financial year 2024, the rent received, there was a positive variance of 1.1 million, which is represented by a 5.5% increase. We also have service charges, VAT, and other receipts. And if you look at the total receipts for 2025 was 35.26 million against the previous year's performance of 34.5 million, which is a 728,000 positive variance, which is 2.1%. In terms of net income, the financial year 2025 ended with 28.9 million compared to the previous year's 27.7, represented by a 1.1 million variance and a 4.3 positive change. Of course, in terms of collections, one of our major challenge continues to be the current arrears that are outstanding by the sponsor. So as at the end of the last quarter, the total balance remains 223 million, which of course is a significant amount in terms of revenue lost. However, I'd like to say that we are also working with the trustees of the scheme to ensure that a solution for that is quickly achieved. In terms of occupancy and leasing activity, as previously mentioned by one of the trustees, for Mombasa, we are steadily increasing our occupancy. At the end of the year, we had 60%. A lot of this has come, as we'll see in the next slide, as a result of all the maintenance works being completed and some still ongoing. And what we can also report is because of the positive maintenance in the building, we have an active leasing pipeline where a cumulative total of 14,500 square feet remains under negotiation. And so hopefully by this time next year, we'll be reporting a much higher occupancy in terms of Postal Pension Mombasa. For the operations and maintenance, as previously reported in the last slide, a lot of the previously pending works are now in progress with some compliance, such as fire safety equipment and resolving of the land rates issue. In terms of electrical systems, we are undergoing repairs for the various floors. And water supply, I'd like to report that we are also trying to reconnect the building through the Moasco line, just to ensure that the building is more attractive in terms of new prospective tenants. So our priorities and outlook for the next year remain to complete the active lettings that were previously mentioned, recover the outstanding arrears and CapEx works, as well as to continue ensuring operational compliance. So that will be Postal Pension Tower. The next slide, we will look at Ronald Ngala Post Office building. So we can quickly look at the property overview. So the property is a 4-story building comprising 20,928 square feet along Ronald Street in Nairobi. One of the major challenges we had when we took over the building is that occupancy was at 9%. However, members, I'm happy to report that the building is now fully occupied at 100%. And of course, that then will then translate to improved revenue. And even as we look to potentially dispose the scheme, the asset rather, that is a positive item to note. So in terms of financial performance for the 1 year that we managed the property, in terms of total receipts, we had 12.25 million against expenses of 0.9 million, representing a net income of 11.36 million. Total receipts, as mentioned, we've seen there, and I think we can go to the next slide. Again, in terms of collections, as previously mentioned with Posta Pension Tower Mombasa, the major areas remain for the space occupied by the sponsor, that is PCK on the ground floor, which as at the end of the last quarter stand at 69 million. In terms of operations and maintenance, with the building now fully let, we are working hand in hand with the trustees and the secretariat to ensure that a lot of these operational initiatives are being taken, which include submetering for the individual tenants on the various floors, ensuring that the structures and common areas are presentable, CCTV is procured, as well as repairs of the lifts. Maybe the next slide, we'll also look at building services where we've resolved a number of issues, and in terms of security, cleaning, and garbage collection, and as I previously mentioned, continue to procure lifts, maintenance, firefighting equipment, and fumigation. So in terms of the priorities and outlook as well, the major one would be, again, to, maybe the next slide, would be to resolve the arrears currently held by the sponsor, to sustain their 100% occupancy. So this would involve proactively engaging tenants, but also to collect the now outstanding income that will be as a result of them taking up space in the building. Of course, CapEx works and safety compliance to also continue, and to generally improve services in the building, just to make the building a lot more attractive for any potential buyer. So thank you. That would be the report for Kiragu and Mwangi.
Thank you very much for the remarks given and the report given by Kiragu and Mwangi for the wonderful work they are doing on our buildings. As property managers, they have done a good job. Let's give a wonderful one clap. One clap. One clap again. Wonderful job. Continue doing the same. We believe that next year, as you have said, you'll give us a better report. Karibu. Oh. Haya, sasa tunaenda moja kwa moja mpaka
Board of Trustees, Postmaster General, fellow service providers, ladies and gentlemen, good afternoon. My name is Patrick Mboro. I am a manager at Laser Property Services, together with my colleague, Susan Kiswili. We are a subsidiary of CPF. Our subsidiary handles the property management for PCK ESPS for their residential portfolio, where we are the property managers. So I'll quickly go through our presentation, our report. Just go to the next slide. So the property performance overview for Lantana Mansionettes and flats, they are located in Lantana Road in Westlands, where we recorded a strong performance during the review period, July 2024 to June 2025. The properties maintained a stable occupancy and continued to generate reliable rental income for the scheme. Next slide. So for the summary, we achieved for Lantana, Mansionettes and Flats, the portfolio occupancy during the review period was 100%. And the composition of the portfolio is 35 Mansionettes and 8 flat units, which are in total 43 residential units. So the performance highlights strong and sustained tenant demand due to its location, effective property management practices during the period, and a stable rental income and strong a strong overall portfolio performance. Next slide, please. Riverview Apartments, located along Dennis Priest Road off Likoni Lane in Kilimani, with the property occupation levels between 2024 and 2025 will be highlighted in the next slide, and they continued to generate income for the portfolio. So for the period under review, the occupancy rate was 89% during the reporting period, with only 3 vacant units. The property comprises of 4 residential blocks with 32 bedroom units and 1 separate 1-bedroom unit, giving a total of 33 units. The strong occupancy levels reflected in the portfolio was due to the high sustained tenant demand and the property's prime location. Next slide, please. For the financial performance, the first part of the slide you're looking at is the billing summary for the Mansionettes, Flats, and Riverview Apartments. The billing summary, as you can see, the total is 28,146,000. Broken down as highlighted there, 18.9 for the Mansionettes, 1.536 for the Flats, and Riverview 7,710,000. It's good to highlight that the first 2 sections for Riverview are blank because we took over the property in January of 2025. For the collection summary, as highlighted there, for Lantana properties, the Mansionettes is 18.4, the Flats 1.5, and Riverview 8.3, and giving a total of 28,344,300 out of the bill, which is 28.146. Next slide, please. So a comprehensive overview of the financial performance is as highlighted. For the Lantana, Mansionettes and Flats, an opening balance of 168,000 and prepayments, which are overpayments of 197,000. Billings of 20,436,000, collections of 20,030,000, giving a closing balance of 376,500, which if you factor in the prepayments, you have 592,500. For Riverview Apartments, balance opening of January 2025 when we took over the property of 6.8 million and prepayments of 445,000. Billings for the period January to June 2025, 7.7 with collections of 8.3 and a closing balance of 8.3 million. Next slide, please. So for some of the proposals that we'll probably be having to improve the property is installing of CCTV cameras, having controlled access, improving fencing and lighting, prompt repairs, and regular service provision, including waste and drainage. Next slide. So some of the challenges faced, late or unpaid rent, I'll just highlight a few, which we have handled to our level best. Tenant disputes and complaints, having tenants and the occupants of the houses going to court every now and then. If I can just go down to that list, you also have flooding during heavy rains, and non-compliance, sometimes due to the challenges that we've had with security. Some of our achievements, as I come to a close, is the high occupancy rates that have been maintained in the property, timely rent collection, improved tenant satisfaction. In as much as tenants go to court very frequently, we've been able to handle quite a number of the resolutions that, the conflicts that we have had. Compliance with, of course, laws and regulations, improvements on security, and renovating and modernizing the residential units progressively. Another one that I would like to highlight as the last one is we managed, of course, to, in December 2024, increase rent for the Lantana Majonettes from 24,000 to 60,000. Next slide. That will be all from Laser Property Services. Thank you.
Proper hand clap for Lesa. Asante sana. These are the property managers who are managing the buildings and giving out rent and doing all that kind of work and collecting that rent. Wonderful work. Congratulations. Now, we are just about, from my program, it reads that we get a remarks from RBA representative. May I just mention, if there's anybody who has come from RBA as a representative to give support. Kama yuko, tutanataka kukaribisha our CEO ya Teleposta Sacco. Please welcome so that you give your remarks and report too. Makofi kwake anapokuja. Asante sana. CEO Teleposta, karibu sana. Tell us what's happening there.
Thank you so much, Mr. Sawe. All right, the PMG, chairpersons, board of trustees, partners that are present, members, good afternoon. Hamjambo. Hamjambo tena. Bado lunch. You're still not hungry. Nimefurahi sana kuwa hapa. Jina langu Miriam Dekei. Niko hapa kwa niaba ya Telepost Sacco. Na pale Telepost Sacco ninatumikia members kama mkurugenzi mkuu. Na niko hapa pia kwa niaba ya board ya Telepost Sacco. Mnapokea salamu za board ya Telepost Sacco na staff wetu wote. Kiswahili changu kimeishia hapo. Tunashukuru sana kwa kutupatia nafasi, few minutes, just to say one or two things about Telepost Sacco. Telepost Sacco and the scheme are really connected for years, and that's because we serve a common member. And the common member, as seated here today, is the PCK, those that are active, retired, all of them. We are connected. 52% of our membership is drawn from POSTA. And those are the staff that are still in service. We have 15% of our membership drawn from the retirees. And when I talk about retirees, it's not just those who are having a pension, even those who do not have a pension. They are doing businesses, they are doing other things out there, and the Sacco has positioned itself over time to serve every kind of need. We are 57 years old this year, 2026. We were formed in 1969, even for members who may not be aware of that. So we have been able to remain relevant over years and over generations. We are housed here by our gracious landlord, Mr. Tele. We are at the 5th floor. For anyone that may not be aware, you are welcome. Pass by, visit us, talk to us. As we are seated here today, my key message is that Telepost Sacco, we are not just here to offer financial solutions to our members, but we are here to transform lives. We are here and we are working towards making sure that one generation after another is served. We are serving the generation of today that are seated here, and we want to serve generations that are coming. So when we think about our services, Even right now, we are doing a new strategic plan. When we think about our services, we are thinking about the product, we are thinking about the customer. So we have been working hard to be customer focused, and even going forward, those seated here today, I can see them. You'll be able to see us being more and more customer focused. It is an interesting time because there are 4 generations seated here today. I can see our Gen Zs. I realize, Mr. Kimathi, you could be a Gen Z, right? Yes, we have Gen Zs. We have Sylvester here is a millennial. Sinikweli Sylvester. Yes, we have Generation X. They are seated here. I can see Mr. Gashara. Mr. Gashara, tusalimie. Wewe ni Generation X. Yes, Generation Y. We have those that are called baby boomers. They are in their 80s and they are still our members, and I can see they are seated here. It is an interesting time. The Gen Zs they are working with us in Ikweli, and we are experiencing what it means to have Gen Zs in the workplace. We love them, we embrace them. They are also joining the circle. It is an encouraging thing. So my key message, let's continue to partner, let's work together. If you are a Gen Z here, the circle is for you. If you are a millennial, the circle is for you. If you are a Generation Y, a baby boomer, sisi sote. It's a long time work we are doing together. When you retire, the circle is still there for you. We are seated here in Nairobi, but we serve members across the nation, across counties. Our digital space is robust enough, our systems are robust enough, and our staff team, they have sufficient capacity. Good governance is what we pride ourselves in as Teleposaco, and I can see some of our directors seated here as part of this company. So we are in safe hands at Teleposaco, and we are very grateful. The challenges I see here are the scheme, they mirror at Teleposaco, and that's because I mentioned 52% of us are in the circle. However, we are grateful because there's a lot of goodwill from the PMG. We are very grateful, Bona PMG, because you have continued to keep your doors open for negotiations and support as much as possible, and we are hopeful. We know that there is a better day for us. So let's keep going, let's keep partnering, let's keep patronizing the circle. We are here, just go up a few steps and you will see us. And we are very grateful for this opportunity. Thank you so much for allowing us to be here. Asanteni.
That is our able CEO for Teleposta. When you retire, don't withdraw your money. Remain and take a loan from Teleposta Circle. Don't retire and go with your money. Please remain and be active. Basi, I want to recognize if there's anybody from Workers' Union. It's in my program, so that if it's not there, we are in the blessings of the regional manager, Nairobi region. Mr. Taylor, stand and give out your blessings to Mr. Korir, so that Mr. Korir will bring us our PMG to speak to us. Stand and give us your blessing. We'll be able to usher in. We are in your jurisdiction. Remember, last year, this year again, you're all hearing ourselves. So please, just say, karibu sana, alafu karibu karibisha ndugu yetu.
Okay, thank you very much. Retired General Sawe, and I'm also following him anytime. So mine is to appreciate your presence here today and welcome you to Nairobi region. This is the headquarters for Nairobi region. We are managing 6 counties, 6 governors. So I'm big. And for now, I'm inviting the bigger person. That is PMG. But before that, I'll call upon the CEO of our scheme, Mr. Korir, to invite our CEO, Mr. John Tanui. Karibu.
Good afternoon, members. Before I invite the PMG, allow me to take a minute to give a summary of some items which has been presented. Members, you must have seen that there was a good performance in both schemes. And this is because of the trustees here and service providers. They work as a team. That is why you are seeing the results. These are monies for the pensioners, the active members, and the deferred members. The excellent performance came from working as a team between the service providers and the trustees. So we need to congratulate them, to keep them support, to pray for them, to continue, so that this financially again, we shall be reporting a good performance. As you must have seen, the whole scheme, it opened with 4.8 billion, and it closed with 4.7 billion 85. Just a reduction of 18 million. What does it mean? There is a reduction. This scheme is closed, but it was able to pay pensioners and still maintain the same funding level. It means it is in good performance. We need to maintain it and ensure that in the years to come, the pensioners, the retirees, will be retiring with a better returns. In the few years to come, as you know, this scheme will have, in few years, around 5 years to come, we shall not be having a huge pension lump sum. I know the seniors, you must be aware on that. So if we ensure we maintain that funding level at that level until we are able to reach a point that will be having a lesser payment of lump sum, what will be coming out is that we shall be having pension review. It's possible. So we need to maintain, because if it comes to negative, what does it mean? The funding level of the scheme will be below the level which is expected by the RPA. And going forward, there is only one thing that we require from all of us, the trustees, the service providers, but mainly the members support the trustees. You must have seen 63% of the asset of the old scheme is property. Out of 4.7 billion, 1.6 billion is an asset which is performing. 3.1 billion is asset giving us 2%. Members, we'll go forward and ensure that in the near future, we have been talking about disposing of assets which are not giving us return, Lantana. What was presented by the property manager? Lantana, it is 1.1 billion. What was collected, if we were keen, what was collected in that property was only members 0.02% return, and that is gross. So members, we need your support. These were properties which were given to staff to live. Now, some of us are living in the same place, few of them. And on behalf of all these members, we should enjoy, all of us, the return from the same properties. These trustees, for many years, from 2008, 2009, they have been taken to court. That is why those assets are non-performing. So we need to support from the members. We be together and tell the few that they are holding us back to stop it, so that we can move forward. The next item, again, members, on the new scheme, it is moving forward. You must have seen it is growing. It was 1.3, it is now 1.5. That scheme, again, if we receive the outstanding remittance, which is almost 1.3, it will double to 2.6. And that one, again, will grow, and the members of the new scheme will get good return. The last item is that what we need, going forward, the chairman of the two scheme, we need to move forward so that the member education should be participatory. You know, in the public sector, we call it what you call? Public participation. So that we get the input from the seniors here, the members here. so that when we implementing the year plan, we will have received the input from the member. So we shall convert it to be member education and member participation. We'll sit down so that we remove these questioning and answers only. The members should be given the opportunity to give the direction the scheme should be taking. So with that few remarks, with the support of the trustees, we shall succeed in whatever we'll be doing. So allow me to welcome the Postmaster General. Let's welcome the Postmaster General. Members who are here, he is the sponsor, and we need his support. So you're welcome. Karibu sana.
Okay, thank you. Yeah, good afternoon. My colleague, the CEO from our Teleposta SACCO, the chairman of SRPS, the chairman of the pension scheme, the trustees here, members, our colleagues. I am privileged to be here today to witness the AGM on 26 May 2026. Accompanied here quite a number of management team that I came with. Of course, I have Wakili. Wakili, I want him to come here because I think this is the first meeting that he's attending. At least our Salamie Kidogo. We have Dennis Nyamichapa, who is the manager corporate communication and postal affairs. We also have Mukhtar Abdullahi, who is seated here, and so your trustee. I have also two board members who are here, that is Pauline, and we have Frederick Siengo. So, Ken, just 1 minute before I proceed. We know Wakili hatari sana.
Good afternoon. I ride on all that protocol that has been set. Wakili Ken Nyamolo is my name. Fortunately or unfortunately, I also crash figures. That is why we were talking with Matengo, FCPA Matengo. We've been there with him. We've understood what was said. We know there is one hurdle that is still holding us. That is the issue of the contribution. I can equally confirm that we sought clarification from the courts, and I think by 30th we shall be getting directions so that we see how we are able to move that issue forward. Otherwise, tuko imara, tuendelee hivyo hivyo. I've seen the reports are equally healthy, and that is a good sign. We look forward for a prosperous future. Asanteni sana. Thank you very much.
Yeah. So, a better clap for Wakili. Okay, dear members from both Postal Corporation of Kenya Staff Pension Scheme and Postal Corporation of Kenya Staff Retirement Benefit Scheme, the representatives from the Ministry of Labor, if they're here, and the Social Protection, the Retirement Benefits Authority, Communication Workers Union. I thought I will see my friend Benson Okwaro, but I can see a Kasina here. At least simama usalamie watu. Yes, it is important to recognize them. They are very important part of our governance structure. Key service providers were here. I was amazed at the eloquence of your presentation. And I thought at some stage that I need to go back to school so that I can listen and understand exactly what you are saying. And that goes back to members. Even as you elect your trustees, we need to look for the best trustees that will be able to listen to these guys. Because basically, the scheme is run professionally by professional teams that we have. Of course, members of the Fourth Estate, thank you so much. Ladies and gentlemen, I'm humbled and privileged to be associated with these two schemes that are today holding their annual general meeting simultaneously. As you are aware, the two schemes are sponsored by Posta Kenya. These two schemes were established by the corporation in the year 2002 and 2010 for the SRPS. Of course, as per the Retirement Benefits Act of 1997, the corporation transferred the management of the scheme to the trustees, who are appointed by both the sponsor and members in accordance with the trustee and rules of the respective scheme and the Retirement Benefits Act via transparent elections. Ladies and gentlemen, the scheme was established in the year 2002. We're talking about the old scheme as a defined benefit scheme and closed on 31st December 2009 after recommendation by an actuarial consultant and directed by the government to convert it to defined contribution scheme, DC, for members. The scheme is therefore guaranteed 100% by the Postal Corporation of Kenya as the sponsor. The role of the sponsor in the scheme is therefore to ensure the scheme's assets are always sufficient to meet the obligation, including payment of retirement benefits and pension for those already retired through appointment of trustees in accordance with the law. The corporation recognizes the role played by trustees in ensuring that the scheme is well managed to avoid deficit that will require funding by the sponsor. I am pleased to report that the Postal Corporation of Kenya Staff Pension Scheme currently holds a fund value of 4.8 billion Kenya shillings. Following a recent actuarial valuation, the scheme's assets are sufficient to cover its obligation, and the scheme remains above the required funding level. The sponsor is fully committed to meeting all its obligations to ensure that members' interests are safeguarded at all times. The corporation has also an outstanding rental debt owed to the scheme and is due for settlement. The board and management are all actively looking at this matter and have taken measures to ensure that it is settled. This outstanding issue has been recorded in our books of account as a pending bill and does require settlement once the government approves the cabinet memorandum that we are already doing on restructuring of Postal Corporation of Kenya. The Postal Corporation of Kenya Staff Retirement Benefit Scheme 2 was established in the year 2010 as a defined contribution scheme where employees contribute 7.5% while employer contributes 12% of their basic salary respectively. The scheme currently has a fund value of 1.5 billion Kenya shillings, and this is an improvement from the last reported financial report of 1.3 billion Kenya shillings to grow as we work towards full remittance of outstanding contribution. The unremitted contribution have continued to accumulate. Hence, the corporation, through the Ministry of Information, Communication and the Digital Economy and the National Treasury, where we now report, are seeking authority to reallocate some of the immovable assets to offset the outstanding members' contribution. The cabinet memo and the restructuring policies and procedures are currently at an advanced stage, and once approval is granted, the corporation will fully settle an outstanding staff pension deduction for the period 2017 to date. Remember, initially we were reporting 2015 to 2025. We have seen settle using our own internal resources 2015 and 2016. The sponsor, in compliance with the Retirement Benefits Directive, resulting from the non-remittance ceased further deduction in December 2021. Further, the corporation has reduced contribution rate from 12% to 10% and is making arrangements to remit ongoing employer contribution while it tries to sort out the outstanding remittance. I urge members to kindly note that once the financial position currently being experienced at the Postal Corporation of Kenya stabilizes, the contributions will resume promptly as soon as possible. Point number 3, Postal Corporation of Kenya's restructuring, a new dawn for the sponsor. It is with great pleasure that I bring to your attention a transformation milestone for our sponsor. the government has officially restructured the Postal Corporation of Kenya, and I'm delighted to report that following the enactment of the Government-Owned Enterprise GOE Act of 2025, the corporation is no longer a state corporation, but is now a government-owned enterprise registered under the Companies Act. This is a landmark development that fundamentally repositions PCK and by extension strengthens the foundation upon which our two schemes stand. As you are aware, the GOE Act of 2025 was enacted to reorient government-owned entities to operate on sound commercial principles with a clear focus on profitability, efficiency, and enterprise value creation. For Postal Corporation of Kenya, this means that we are now empowered to run our business with the agility and discipline of a true commercial enterprise. The corporation can now diversify and grow its revenue streams across courier, logistics, e-commerce, fulfillment centers, financial services, and digital postal solutions. Pursue strategic partnership and joint ventures, optimize our extensive nationwide footprint, and compete effectively in a dynamic marketplace. From sustainability standpoint, the transition under the GOE Act is a game changer. It places PCK on a clear path to long-term financial feasibility by strengthening the corporation's balance sheet, unlocking value from unutilized assets, and anchoring performance-based governance and management, and progressively reducing reliance on the exchequer. Equally important is provide the framework and impetus for the corporation to fully honor its obligation to the two schemes, including the settlement of outstanding rental debts and long-pending members' contribution accumulated from 2017 to date. For the members of our two schemes, this is particularly welcome news. A commercially viable, well-governed, and sustainable sponsor is the strongest guarantee of secure, timely, and well-funded retirement benefit. The board, management, and I remain fully committed to leveraging the opportunities presented by the GOE Act to safeguard your interest and restore Postal Kenya to its rightful position as a premier service provider and a dependable sponsor of the scheme. Yeah, ladies and gentlemen, I think as I end, in line with the new chapter and the renewed financial footing that the GOE framework affords the corporation, I am pleased to inform you that high-gear discussions are already underway between the sponsor, the trustees, and the relevant government agencies towards the full resumptions of members' contribution to the scheme. Subject to the conclusion of this engagement and the requisite approvals, it is our firm intention that contribution shall resume with effect from 1st July 2026. This is a deliberate and concrete commitment by the sponsor to restore the contribution cycle, accelerate the growth of the scheme's assets, and reaffirm our unwavering dedication to the welfare of our members, and both in service and in retirement. Before I take my seat, allow me to most sincerely thank and commend the trustees and the elected members representative of both schemes for the diligent, professional, and selfless manner in which they have continued to steward these schemes on our collective behalf. If you look at the composition of the trustees that you have, of course, we have Nancy Matenge here. She retired, and I deliberately decided that she continues as a trustee on the basis of those retired pensioners that we have. We have Suleka Mohammed as well, and all the other members that are participating, which means the management of this scheme is wholly in the hands of our retirees. And these are the people going forward. I'll make sure that quite a number, substantive, will be nominated as trustees to the pension scheme. Can you give me a clap on this? Yeah, they are a competent, dedicated, and capable team. And as the sponsor, we are very pleased with the quality of governance and management they have demonstrated to date. I wish to further state categorically that the sponsor does not and shall not interfere with the day-to-day running of the scheme in any way whatsoever. The independence of the trustees are enshrined in the trustee rules and the Retirement Benefits Act. It is sacrosanct, and the corporation remains fully respectful of the mandate. Finally, colleagues, I wish all members of the two schemes successful deliberation and a fruitful 2026 annual general meeting. Thank you. Thank you.
A hand clap for our CEO, our PMG. Sante sana. Those are wonderful remarks, and we are very grateful. I believe we are following one by one, and we are blessed. I know this forum is being watched through Facebook and YouTube, and our people all over the nation are watching this great day, the AGM, 24th and 16th. So we are very, very grateful that this is being followed all over, from county number 1, which is Mombasa, to county number 47, which is Nairobi, the city of Kenya that we are here today. So we are very grateful. Now we are reaching a very, very important session, which is Q&A, questions and answers. Please don't go back. I believe those of you who wrote their questions through the secretariat, I believe the secretariat to ask a list of the questions you've given. And if you are here and you have a question, at that time, when it comes, please take a microphone, speak your heart, and we believe that we shall be able to get an answer of every question that is there. So, tunasema karibu sana kwa sehemu hiyo. Basi secretariat tunawakaribisha ili mutuweze kutuongoza katika sehemu hiyo. Asante sana. Very important session. Yeah, question and answers. It's very okay.
Thank you very much, Sawe. Tumpigie makofi. So we are now getting into an interactive session. I've seen Mukhtar. He has joined us. But the organizers of this podium, I think they were not sensitive to you. So don't sue us. Next time, we'll ensure that the ladder here is sensitive to the needs of the group you represent. Yes, kuna mic. Who will go first? Questions? Karibu sana. Oh. Nani ako na swali? Any clarification? Yes, so you say your name for purpose of record and ask your question. Karibu.
Okay, thank you for this opportunity. My name's James Mugambi. I'm happy to be here today for this section. My questions, I just have a few questions about this pension. As you know, about our economical economical issues that are taking place in our country, and also on the matters of geopolitical issues that are taking place in our country. Investment is key, and it is important to understand where we invest. And for now, as I have heard, our investment is more probably made on investment on assets and investment on securities and government investments like bonds and other investment that's made on that line of government issues. But in nature, that what we understand is that these investments sometimes in human nature, we cannot foretell what might happen in our future. Like now we are going to 2027 when our country might face political issues that might arise where there are no stability in that political area. And also in the economical aspect, as we can see, we are heading to that area where our investment might be affected in one way or the other. That is why I just wanted to know how, what's our trustee doing to see that our investment is not affected by the way, let's say there is an insurance that we are able to get our incomes even after all the turbulences of life and those economical issues come about our investment. You can see the government is coming up with the infrastructure collections of a fund that will be able to be funding the government. Therefore, this thing that might affect even the investment in bills, the investment in our central bank, those investments will be affected by the rates that we will be paying, like the interest rate that will be giving the return. The other thing you see that our government is coming up with investment in housing. You can see government is building a number of houses almost everywhere in Kenya. Therefore, the investment in housing will be no more something that will be very viable to invest in. You see that the returns will not be to what I have seen there, like 28,000 that we are getting from that kind of investment. Is there an insurance that can be taken, can be put there that the retirees will be able to be assured even after this, all these turbulences of happenings, they will get their returns, they will be able to be paid their pension. Another issue, that is the insurance cover I was talking about. I was talking about, I have heard about court matters that are being taken by our people. We are the same people that are taking our pensioners to court. We are the poster people. Is it a creation of mankind whereby a cost is made where people benefit from the cases that are taken to court? Just that what they get from the cost settlements, that some people benefit from there, and it is a creation of ourselves. If poster is taking it is poster that is supposed to limit. We are the same people that are limiting people there. That is, I'm trying to request whether it is an arrangement of mankind or how can we move out of this
As
kind
you
of
wind,
cost.
yes.
There's another thing I just wanted to ask is about, can we be able to get a ransom return? Let's say that, can we think of withdrawing from that, from the pension? Can we be able to get our money back like the way we get from our circles? You see the way we get back our investment in circles, can we be able to get that lump sum we go from 2003 to the date? Can we be able to get that amount that we invested in that pension, that as a lump sum? Like the way these days the people are getting their lump sum that that has not been limited by poster, people are able to get that lump sum back. Now the question is, can we be able to withdraw and get that ransom back to us when we are not interested with the pension? Another question is, there is this issue of...
Kindly come up with the question. The
Yes.
explanation should be
You
done
summarize
later.
your question.
There are so many, our time is not okay.
The question now, the question that I was having the first time is about if there is an insurance that is able to cater for...
Okay, what's the next question?
Another question is about the court cases that are being taken by our own
Okay,
people.
the next question.
And another question is about the lump sum amount. Can we be able to get
Okay,
the
thank you.
lump sum that is invested?
Thank you, thank you.
Like we got from SACCO.
Yes.
We'll require...
Let's agree. We do 4 questions. That is 4 members. We answer those. Then we get to the next round. Yes.
Thank you, my brother. Thank you for the question. We'll request, go directly
straight
to the question.
Yes.
Just ask the question directly. Other explanations will be done later.
Yes, my name is Nyandoro Kefosoro. I'm retired. I took early retirement. We are sacrificed for so long for the corporation. Why should the corporation not sacrifice the active members for us, the retirees? Because they are stuck with our money, 2015 to 2021. Would they sacrifice the active members so that those who are retired to receive that money? The corporation should look ways to give us the remaining amount of 2015, 2021, so that we cannot be suffering for so long.
Yes. Take those two, one at the back, and then come to our lady here.
My name is Emmanuel Meli. I have 4 questions. What is the maximum days, months, or years for benefits to mature? Number 2, what could make or contribute for a benefit to delay? Because contributor does it on time, we expect it because it does inflow to outflow. What will be measures to be done to make sure benefits will be channeled immediately after retirements, because you have everything in your system and you know this person by this time or month of this year, contributor will have retired. Do you have maximum years for contribution? For assets, have you developed a digital system that once someone retires, he or she has option to continue to contribute or withdraw?
Take note, Kimathi. Give to our lady here. That is the last one so that we can answer those.
Hello, I am Florence Nyariro. I'm a retiree. I retired in 2020. You see, I'm passing through a lot of difficulties. I am asking about assets. When we came at the AGM last year, we were told those assets are being renovated. How long are the assets are being renovated? That is a lot of money, because since last year up to now, renovation is still going on. That is a lot of money. Thank you.
Okay. Now, Kimathi, you can answer question number 3, what Emmanuel asked. And we've got our actuary here. Did you hear the first question about the geopolitical? Do you have an advice on the same? So you'll say something. So Kimathi, be up first. Give him the mic. You can speak there.
Yes, good afternoon once again. Yes, I'm here to respond to the question of Emmanuel Mary. And the first question was asking about the delay in the processing of benefits. According to the law, which is in place, trustees are supposed to process your benefits within that working days. But they have an internal policy which requires the Secretariat to process your benefit within 5 working days. But now what happens is that it is only possible practically to process those benefits within 5 working days upon receipt of the documentation of the retiree. So kindly ensure that you are able to update your claim forms, provide the necessary details in terms of bank account details, your beneficiaries, so that when your file is forwarded to the scheme, they are able to process your benefits immediately. He was asking the other question in terms of the maximum years of contribution. I think the current trust deed and rules stipulates that once you become a member, you are supposed to continue contributing as long as you are an active member. Mary, where is he? We are show of hands. Is he around? Are you okay? Thank you.
Thank you so much. Give to our actuary to respond to the first question that was talking about the geopolitical situation within our country. How safe is our money?
Thank you. With regard to the geopolitical situation, which is basically the US, Iran, and Israel war, and the upcoming elections, what I can say is that those are risks to investments, but we are well aware of them. That means, number one, we are working and monitoring those risks to ensure that we position the portfolio to take advantage of opportunities. Even with the risk, there are opportunities that could arise. And number two, we are also trying to protect the portfolios. That means that, for instance, if the interest rates are to go up, then the investment strategy would shift. And the year that we've just reported, interest rates went down and it worked in our favor and the returns were good. But when interest rates go up, the bond valuations could lose value because there's an inverse relationship. But what we will do instead now is that we will choose to hold more of liquid assets and invest in the higher rates. So I think what I want to give you comfort is whichever direction the interest rates play, we are well protected by active management. And that's why we are your portfolio managers. And then number two, and the last thing that I will say is that the risks are what we've seen from the past. We've had elections before in Kenya. We've seen the Russia-Ukraine war that was there previously in 2-3 years ago. And what we've learned is that once the conflict ends or once the electioneering period ends, the market returns to normalcy. So the lesson from history is that there could be a period of volatility or uncertainty, but after, if that is short, that is usually, the first lesson is that is usually short-lived. And then the second lesson is we will return back to normalcy. So markets usually have a mean reversion to normalcy, which is a stable environment for investments. Thank you.
Thank you so much. Osoro is asking, why can the active members sacrifice for us, those who have retired? Did you hear that question? The 2015 to 2021 issue. Can Matenge respond to that?
Hello, everyone. Good afternoon. Just to respond to that question, when I was in office, when I was the General Manager, Human Resources, there's a committee that I had put in place to take care of arrears for 2015 onwards. Those people who are not being paid, and they are in two categories. One, there are those who are in serving, so their remittances, the amount they had contributed had not been updated in the system. And two, those who had retired and were still waiting for 2015. Of course, I've just inquired to get more information on where we are. That committee is still in force. It is still working. And I'm informed 2015, those who have retired have already been paid. 2016, those who have retired have already been paid. And now we're in the process of paying 2017. So at least that is good progress. For those who have retired like me and others, we have not been paid. So I would want to say that because once in a while I see people calling me thinking that maybe some of us, because you are in senior offices, I know you are paid. We have not been paid. We are also waiting in that queue. So I hope I've answered. I hope I've shared that information so that we are in the know. And clearly you have seen that the new scheme is growing. Both schemes are actually stable, so the payment will continue. And of course the sponsor promise that, and the CS, that once we are done with the issues of the court, those who are interested in continuing with the contribution, again, when we agree we are going to contribute, we contribute, all of us who are able to contribute, unless you are on contract. So once we are able to resume contributions, the scheme, and especially the new scheme, will continue growing. And we pray that the stability of the scheme, and especially for the members and those who are already in retirement, is assured. Thank you very much.
Thank you so much. There is a question from Nyariro, who was asking about the renovation in our properties, in the, I think, residential. We are doing it progressively. We've not allocated money to renovate the whole building, but we are doing it progressively as at when it becomes due. Like when we have a member exiting or a tenant exiting, we renovate that house and now charge the market rates to the new tenant. So it's not a lump sum figure that we are seeing, but we are doing it progressively. But again, bring us customers. You might have noticed that these properties are giving us 2% rate of return, while the financial assets is giving us up to 18%. So we want to sell these properties so that we can recoup on having a higher percentage. That is, we invest in high yielding assets. What we are targeting is the residential properties, that is Lantana, Mansionettes, Riverview, and Ronalingala. We are in engagement with our sponsor. I think they want to replace the POSTAL GPO in Mombasa, because it's a landmark property. But I think the directors here are in the know. Let's get to the next round of questions. Yes, our senior. Karibu sana.
Asante sana.
Na yuko umetuletea samaki. Endelea.
Good afternoon, everybody. Bwana asifiwe. Fellow pensioners who are here, can you raise up your hands? Thank you for coming. And I think today the guest of honors for this function are the people who have been least mentioned, the pensioners. Pensioners, Muko. Muko. This is your day. Ama namna gani? My name is Commissioner Odingo, a retired PCK employee. I retired in 2010 as regional manager Nyanza, having served in Northeastern and Western. Previously, I served as a human resource manager at Postal Headquarters. I am coming to this function today to represent all the pensioners of Postal Corporation of Kenya, plus Kenya Post and Telecommunications Corporation. And I want to thank them for coming, because we have burning issues, and those burning issues can only be presented by us. Thank you for coming to put this pressure. I want to appreciate the entire team who are up there, many of them my friends. Thank you for the presentations we have had today. One thing which has come out very clearly is that our pension scheme is strong. So mmesikia hiyo, that our pension scheme is very, very strong. Liquidity level is very high. We were told the liquidity level is between the liquidity level is 1.3. It was 1.3. Now we are at 1.5. Si ndio? Hiyo ni mzuri. We are also told that we are above the funding level. Actually, 103%. But the most shocking thing, our service providers who are still here, the most shocking thing is that nothing is trickling down to the pensioners. Hiyo ni kweli ama rongo? Si ni kweli? Nothing from these flowery reports you have given us is trickling down to the pensioners. We have made representations at a lot of forums and platforms to demand for increase of from 1% to 5%. We have made this demand for so long. Pensioners ni kweli ama rongo? It is always 1%, and it is paid after every 3 years. So after 3 years, we are paid 3%. 3%. Most of the pension schemes in Kenya today pay between 3 to 5% every year, per year. If we are making very good returns, if we are making business, we are doing good business, why is it so hard for our board of trustees and the sponsors and all those people who are there to be able to share with us the proceeds of those benefits? Tunalia, even up to now. I saw the telecom lady was here. And the telecom lady, every year, they get bonus. And they get bonus, which is almost equivalent to one salary. Kweli rongo? What has happened to ours? Where are you doing business? Are you doing business in the moon, or where are you doing business? If Teleposta is doing the same business in Kenya and getting a lot of good returns and sharing with the retirees, why are you ensuring that we die hunger? We die in hunger. Why are you ensuring that we die hungry? We cannot meet our medical bills. Even the cost of transport to come here was a big problem. That is why most employees, most of the officials of this pension scheme were not able to travel to come here. I can tell you. I have left very many of them in Western Kenya. I only have a few of them who have come because they are coming from around Nairobi. Our plea, the board of trustees and the sponsor, do business, but remember, the people who have brought that money are there. The people who have made that money are there. And they have suffered. Please find it in your hearts to share these very good returns with us, starting this year, so that we can see at least 3% per year, so that we can see some bonus, annual bonus, so that we say our pension scheme is strong. Otherwise, service providers, those flowery statements you're making here will go to waste. I can tell you that for free. We are hurting. Nancy, you know that. This is something we have shared with you. All of you who are sitting there. Oria, you know that. Oria is my friend. So I think that is a very loud statement from today. Let the review be done. Starting this year, let's see if you are serious that we can also partake of these benefits which are flowing down. 3% a year ago. 3% is our. 3% is our. They have had and a bonus. 2, and the elephant in the house. Today, I was sitting there patient to hear if our people here would raise it. The elephant in the house today is a governance issue. Governance, how this scheme is being governed. And this governance is cutting across all the key sectors. It's from the sponsor to the pension scheme, to the RBA. Governance issue is the one which is making us suffer. Today, we are saying Bwana Korir is the CEO of POSTAL pension scheme. Who has put him there? This meeting should not even have started in the first place, because the role he's playing there is a role which has not been cleared. What we expect after the departure of Elijah, what we expect from the departure of Elijah is that there ought to be competitive sourcing of a new CEO. A new CEO cannot come from nowhere and say that I'm now the CEO because the sponsor has said. No. Pensioners are saying we need to have confidence in the process of selection. Somebody talked about process here, and he talked a lot about it. I don't know where he is now. Process. This process cannot be exclusive. It must be inclusive. It must be seen to be practice. Rotich is my friend. Naitwa Korir. Korir is my friend. We worked with him. But when it comes now to looking after these millions we are talking about, these millions, millions. Actually, not millions, they are billions. Billions of money. We must trust it to a person who has come through a very competitive process and certified to be competent. Let him contest. Let him stand with other Kenyans so that the process can get him through. We have no problem with him as a person, but we have a problem with how it's being planted there. Bwana Korir, don't allow yourself to be misused. You are trustee there for so long, and we know. We are not stupid. The risk of exposure of these billions of money and the risk of abuse and looting is very real. If this is the process, don't allow yourself to be misused. Step down, let this process go competitive. And on behalf of the pensioners, I want to say we are very disappointed with the retirees board. Each and every one of you are sitting there and you have done nothing to ensure this process is correctly done. Behind you, behind the system, you are also pleading. Hata sisi hatujui. What are you telling us? We put you there to be able to ensure the right things are done, to secure our interests. Otherwise, my fellow pensioners, hii pesa mmesikia hapa is at a very high rate. Hii pesa mmesikia hapa is at a very high rate. That is why today I have come all the way from Kisumu to come and tell this gathering that we shall not allow this to happen. The sponsor we know. The sponsor has no integrity. The sponsor is the one bringing down this scheme. Because you had in arrears, they have arrears in terms of rentals, mingi sana. How many? It was 69 billion. And even the new scheme, people cannot get their money because of the sponsor. They come here and make very flowery statements. We are saying that we have no problem with Korea as a person, but we have a problem with the governance processes which are there. Let competition be effected. Me, I'm a human resource expert. And I know that you cannot just get a job coming from the village because you are my fellow villager. Kuja ukae hapa. Hiyo hakuna. Kama ni mbaya tutaenda court tusimamisha hiyo maneno. It is unfortunate RBA is not here. I would have wanted RBA to be here to tell us how are they protecting the interests of pensioners. Because this is not protection, this is exposure. This is exposure to scandal. And by the time you come back here, if you find this organization standing, you'll be very lucky. 2, I have never heard of a sponsor, I have never heard of a scheme like this, where the sponsor, a board member, becomes the chairman of a pension scheme. Have you ever heard? My friend there, Mwalimu, is a board member. This my friend from Nyanza, I know him. We know one another. Name gani? Si mnajua Mwalimu ndio huyu. He's a board member of PCK and he's the chairman of the new scheme. When you talk of being conflicted, can that not be an understatement? How can you be a board member being a chairman of a pension scheme? Can it work? Who is going to provide oversight? Who is going to provide oversight and secure the resources and the interests of the pensioners? Iko? Hakuna? We are requesting on behalf of pensioners in Kenya, PCK pensioners, that a board member, my friend, the chairman of the new scheme, with all humility in the world, we are asking you to step down. Sisi sio wajinga, wajinga waliisha Kenya. The president says wajinga waliisha wapi? Kenya. You cannot be a board member, a PCK board member, and you come here to say you are a chairman of our new pension scheme. The new pension scheme that PCK has failed to fund. PCK is the one supposed to fund this organization by remitting our money is there. And POSTAL, the sponsor, is the one sitting on that money. Imekata. Now the board member is the chairman. So come on, Mesama Mekata. Are you seeing that? Are you seeing it? With due respect, on behalf of these pensioners, we are asking that the chairman of the new scheme, Japuon, step down. Do your job as a board member so that you can provide oversight. If pension scheme is failing, you can ask as a board member, why is pension scheme failing? Now you are conflicted. You cannot ask that question. So we are asking you with utmost humility to step down and allow the processes to be effected properly. I want to say finally,
that is the fourth one.
Yeah, that the service providers, we thank you. I have seen you are good people. But one of you is really hurting these pensioners here. It's called Samara. Why is Postal Corporation of Kenya the sponsor in love with Samara? Why is the pension scheme in love with Samara? Huko kwetu tunasema ukienda kuoga unaoga kidogo alafu unatoka hapo. Si ndio? I think other Kenyans also say that. Si ndio? When you go to take a bath, don't be there for long. You may be swallowed by the crocodile. Samara, there must be a reason why you are permanently being engaged as a what? As
actuary.
An actuary. And all the time they say, we cannot give you more than 1% because Samara has refused. We cannot adjust your annual payment because Samara wamekataa. Samara wanakataa. Samara walikuwa wanafanya kazi posta. Hii pesa tumeleta, Samara aleta nini? Why are you insisting on killing us? If Samara is here, Samara, are you here? Is Samara here? Today we are telling you point blank that we are not happy with your services in this scheme. You are being used as a cartel to ensure that we die in poverty here. There is no organization that can pay in perpetuity 1%. For 1% per year, then you have 3% after every 3. No, it's not possible. I want to request these service providers that as they provide those services, they should look behind here. Those services are generated by people you are seeing behind here. And these people require that you appreciate them, because they must see the efforts of your work in terms of what they get, they take home. Samara and other service providers know that you are dealing with human beings. Sisi sio karatasi, ni binadamu. So know that you are serving us. Finally, I want to say that
that should be the final one. The fifth one.
Finally, I want to say.
Yes, proceed.
I want to say, and I would have wished that the trustees and even the PMG was here. The critical document that is making sure that our organization, our scheme is not properly governed is the trust deed. The trust deed is the governing instrument for pension scheme. This trust deed, the trustees and the sponsor have made it a hobby to change it as much as they want. And they change it without reference to pensioners. Today in Kenya, there's something called public participation. Sindio? You cannot change a governing instrument governing people without reference to them. Can't you seek our advice on those issues you want to change? That document has been so much vandalized that you do not even know whether it is the trust deed we are talking about, whether it is our trust deed, our trust deed, your trustees na sponsor. And in all this, RBA is sitting pretty, because RBA has been compromised. Without a proper trust deed, we are not protected. And that has been vandalized. Bwana Korir was part of that team who vandalized that RBA. The last review of 2021. So you cannot come pretending that you have clean hands. We know. We are asking the trustees, board of trustees, please do a new review and let us be involved to be able to have a document which speaks to us and which covers our interests. Today, we are not covered. Fellow trustees, our trustees, can see Bwana Mwai there, can see Bwana Odoyo, can see Oria there, and the others. You have let us down, particularly Oria. You are the one who has been leading this vandalization of this document. Musifikiri hatujui. And that document has made sure that you have run on the resources of the pension scheme. It is only you who benefit. Ile kitu inakuja kwa pensioners hakuna. Hata nduru hakuna. Nothing comes down. Look at the tours they have, educational tours. Educational tours they have every year, and it's in terms of millions. We are not stupid. Those tours must end. We want to stop wastage, so that we have some benefits flowing down to the pensioners. Pensioners muko. Kweli ama rongo? We must stop wastage. You are making millions of money out of those so-called educational tours which are not helping us. After you are through with it, nothing comes down to us. And you're not ashamed. Wastages must be addressed. Even the wastage my sister here was talking about. This perpetual maintenance. Perpetual wear and tear and maintenance. You talked about it. And they think we don't know. When you go to maintain Mombasa, it is in terms of millions. You go to Ronald Ngala, it's in terms of millions. Why can't you maintain us also? Why can't you have it in your heart to maintain us also? Before you maintain the physical things. We are the human beings. We are the ones who have brought in the money. Share this money with us. The trustees, you have let us down. I fought to be a trustee, and I know I was made not to come in. Hey, walikata kabisa. I am aware. But I am with the people. And we are the people. So if we did not know that today, your time is up, this pension scheme shall not die. PM just talked about other retirees who have come on board. Mmesikia we have been talking about lack of representation in the PCK board, lack of representation as pensioners, because most of the representatives are from the sponsor. Sponsor amejaza hiyo nyumba, paka nyumba ikajaa paka mlango. Kila mtu ni sponsor. Na ndio amesimama hapo, kakuja akasema tena, hawa watu nimewaingiza Give us a chance. Increase the number of representation of retirees and give us that chance to elect ourselves. Don't appoint retirees. Don't appoint retirees as trustees. Give us that chance to elect ourselves. Retirees kweli rongo? Sini kweli? Many of these people thought they would not retire. My fellow pensioners, manasikia? When we went to meet them at the office there, many of them thought that they would never retire. I am happy to hear the PM just retired. I know Nancy, my friend, has retired. I think Korea has retired. You are going to retire whether you like it or not. So prepare the ground. Ndio ukikuja upate kama iko mattress na godro na blanketi ya Raymond. Or else mtalala bila blanket the way we are sleeping. Then Mathenge is cheating us that hawajalipwa. We know you people have been paid. And that is why even those who have retired, people are being selected to be paid. People are being selected to be paid. It is not first come, first serve. It is not. It is not. These people will tell you how many people have been waiting for so long. And we know those who have come out recently and they have been paid. So there must be fairness in the payment of retirement benefits. I think sometimes let us all be human, knowing that hii safari ya fanya kazi iko na mwisho. It has come to an end. Whether you are the PMG, whether you are the messenger, it has to come to an end. Just be fair. So we are praying that going forward, first priority in all your transactions, remember the benefits must flow to the pensioners. In all your meetings, even when you are going for educational tour, remember what will the pensioner have here. Because you will not be millionaires, but you may be millionaires in a lot of pain. Because God is listening. God is listening. Thank you very much and God bless you.
Thank you, Makofi. Yes, the questions are already heavy. We've got 5 questions here. And yes, I want to allocate but first, about the 3%. Kimati? Oh, atasau. I've gotten a new name. Unaitwa Oria? Karibu.
Thank you. I think let me make a correction first. My name is not Waria. My name is Mokhtar Abdullahi. A point of correction to my friend Moses. Moses. Okay, I want to make a point of correction. I don't want to, I respect Moses Odingo. I don't want to tell him that he's lying, but let me use the word that is misleading. The issue of some of us have been paid. Yes, me, I retired, not because of age, but because of the policy where we are all general managers who are put on contract. And I became a retiree. So I'm also in that category of a pensioner. You are not alone, Moses. And I want to confirm, me, I was not paid anything. Leave of the 2015, I have not taken my, what do you call, my lump sum for the new scheme. So now I want also to confirm Nancy has not been paid, Tele has not been paid, Zuleka has not been paid. So we are in the, even Korir himself who left in 2022 has also not been paid. So we are in the same boat, so let's not mislead the members. And we are really pushing. I understand the suffering, those who have retired some years back who have not accessed their benefits from 10 to 15. We really understand, we really feel the pain. That's why the trustee has taken that matter to court, and we are really pushing. In terms of the changes in the trust deed he has mentioned, I want to make a clarification that the trust deed has been changed twice since I can remember from 2014 up to now. and those changes were necessitated by the governance guidelines issued by RBA. And RBA, when they are coming with the new guidelines from time to time, they do through public participation. Whatever comes out from their market survey or the public participation that they conduct is what they implement in the best interest of the industry and the members. Now, the latest trust deed which was changed, it was only one item, which was about the term of the trustees. An act of parliament came extending the term of trustees to 5 years. Initially it was 3 years. So if an act of parliament came, that it has to be aligned with the trust deed. So we cannot remain in vacuum. So that one was done, and it was from the RBA. So it's not anything that which was done behind the back of the trustees. It is something which is very clear. The Act of Parliament was there. It is in the Kenya Gazette. The guidelines are issued by RBA. It is there. So that one, it is nothing. I mean, we have not done anything wrong behind the back. So members, let's not be misled. And then let's also have one clear clarification. When we talk of the scheme, let's talk of members. We are all members. Moses or Odingo should not divide us on that line of pensioners and active. There are 3 categories of membership: active member, deferred member, and retired, which are the pensioners. So the pension scheme or the industry acts on the interest of members. There is nothing called I am a active member, I am a deferred member. We are all members. And the scheme should look at the interest of the members as a whole. The other thing I want to defend, Zamara. My brother Moses Odingo also misled. Zamara have not done the actuarial valuation, which determines the allocation in terms of the pensioners which were given. Through the presentation which was done, you have seen Zamara was engaged in terms of determining the interest rate for the new scheme, which they did a good job. And I came late, but it was reported it was 18.9% interest, which has never happened in the history of this scheme since I joined. So they did a good job. Zamara waliwacha ile kazi, hiyo ilikuwa ya zamani. The team that did the actuarial valuation for the old scheme this time was a different actuary. So let's defend them. Please, let's not tarnish their name. And the other thing, you know, when you are on the other side, saying is easier. But when you come here as a trustee, you know, things may be different. This issue of giving what do you call the increase in terms of to the pensioner every year, it depends on the performance. No, everybody wants, even us, we are in that category of pensioners. This time round, God willing, inshallah, nafasi ikitokea, I want to be the chief campaigner for Moses Odingo to be a trustee so that he comes on this side and you will hear what he will say that time. Whatever he's telling you today here, you are hearing. You know, saying is easier, isn't it? I am ready to be your chief campaigner, to elect you as a trustee. When you come here, let's hear what you are saying, if it can be implemented. Because nobody wants to deny if the funds are available to be allocated. And that's the work of the actuary. After every 3 years, that is the policy, actuarial valuations need to be done to determine what can be distributed and given back to the members, the beneficiaries. So let's try tuombe scheme perform and ndio tuwe na the best performing. So hiyo pia safari hii tuchague Moses Odingo as a trustee of the whole scheme, and we give him that target, whatever he's saying today here, whether it is possible. Labda atakuja na miracle, labda Mungu atasaidia yeye, hatujui. And maybe maombi yake inafika, but this time round, I'm ready to support him. And then we see the miracle to happen. Kwa haya machache, let's pray for the scheme.
Thank you.
Yes.
Thank you so much. You've done most of this. I think you want to...
Yes, thank you very much. I want to respond to a question on replacement of Elijah Koske, who left us for greener pastures. And I'm not here to support the sponsor, but I'm a HR expert as well. And we worked with Mr. Odingo, and he was my senior. A lot of respect. But one thing we were also taught when we went for training in HR is that we gather as much information as we can so that we are able to pronounce something, and when we ask questions or we make decisions, we make informed decisions. So Elijah Koske gave us a notice. I think when he went for an interview somewhere, he was taken and they urgently needed CEO or trust secretary, and he was taken and given a very short time to report. And of course, he informed the board of trustees, and we tried to come together. It was very difficult because, again, you need to know that the scheme and including meetings are highly regulated by the RBA. We could not meet, but the good thing is that these days we are able to meet online. So we had an online meeting, and we agreed that we need to write to the sponsor, report that the trust secretary is leaving, and it was a very, very short notice. So the sponsor made a decision. Mr. Peter Corrill is known. He's a long-serving trustee of this scheme, and he was also the general manager finance. So in terms of what he can do is known to all of us. And the sponsor made that decision that we need to go through the due process of recruitment and replacement of a new, of the CEO or the trust secretary who left. But to avoid vacuum, he appointed Peter Corrill on temporary basis as we wait for the recruitment process. So we had a meeting yesterday, what we called the joint board. Both before we do that, there's a committee that sits to discuss such administrative issues and HR issues. It is called the admin. Again, we met online. Because when I say RBA is highly regulated, we cannot just decide to go for a meeting. Odigo, when you join, because Mukhtar says he's going to campaign for you, you'll get surprised. You sit in Kisumu and have those meetings online. And that is what we have been doing. The success of this scheme has survived because watu wamejitolea to have those online meetings, pro bono most of the times, no payment, and for us to make decisions, especially when things happen. So Peter Corrill was appointed by the sponsor, and that is his responsibility. Did we follow the due process? Yes. The sponsor, did he make the right decision? It was his prerogative to give us someone on temporary basis so that there is no vacuum. And Korir had what it takes to do that because of his experience in PCK. So we have started the process. Yesterday we had a meeting of the joint board, and that decision was ratified that we are going to start the process. So it's going to take 21 days. You will see the ad.
Ada timu la Pel Nikasa.
Nothing that bears stops a member of the board who has been nominated by the sponsor to become the chair of the board of trustees here at the moment. Maybe let me give you a brief history. And Moses, you can remember the former CEOs, whatever of trustees of the pension scheme. But because of such conflict, and the matter was taken to RBA to address it, and they removed CEOs from becoming trustees. In the current scenario, there is nothing which stops a board member from becoming a chairperson. But if you feel, let me finish, if you feel that that results in a conflict of interest, RBA sessions can be fixed so that at least in their next governance guidelines, it can be removed. And as Moses, yes, as for now it is like that. As he said, he is an HR expert. I'm also a certified governance auditor. I'm a certified secretary. And from where I sit, it may be a loophole, agreed. But the current scenario where we are, there's nothing which stops a board member
Nataka tupe Matenge Nancy mtu wa photo dance. Karibu sana. I don't know whether
especially for the old scheme. And it's good to say the truth where the problem is. The problem is, we have an accountant. And I want to thank the trustees. By the way, I want to detour from the thinking of Guadalupe and say, we have an accountant, yes. Previously, we had an IT expert as the administrator. We had HR as administrator. The truth is, and even I can challenge workers. HR knows HR issues. That is the area of speciality. That is true. Teachers know software. Who are living in also. Accountants are trained to analyze figures and criticize figures. We can't sit as accountants and see accountants being slaughtered. No way. Have a place and the no figures. In the process, get better returns, for sure. It's a process, not an account. No. That is true. Because I'm at the meeting, somebody wrote. It is the process. Yes. The process. So what we are saying is this. We need to get better returns. It is very clear that the new pension scheme is generating better returns. Yes. Because they are having liquid assets. These fixed assets we're having in Lantada, Mombasa, Ronald Ghana, for sure. I put a bit in a letter. These will be to the letter, they appropriate. And also, you can't have an asset value that's 400 billion, generating 20 billion, 400 billion per letter, 20 billion. That's the problem. The RBA guidelines requires that we have liquid assets to the tune of 70%. This liquid risk of fixed assets should only be covered at 30%. Sasa tukiweka pesa na tunatarajia returns tutakuwa nazo. So we also have to protect our interests. Sisi tuko na watoto. Hapa mbele tunaretire sisi wajaluo. No, we have children after later days. So then we have to be very very cautious. You know what we need to do? You know what we need to do again? Then, after the issue, we also want scheme for the issue of valuation. Valuation. It is only this one in the world scheme where value has gone down. You don't know how. You don't know how. Where valuation has been done. And then the end result at the assets event. And you don't have it your what has been sold. So that one maybe kindly don't engage such a value. Valuation, land, building, and all shall be shared. So we cannot be told they are wrong, they are apple products, and it is well. That's what there is problem. Then of course I want to thank you very much. But we have to put a place for accountants to be clear. Yes, thank you.
Yes. Sensitive time. Can you go faster? My name is Mine is on the right. I don't know how far we have come with that. The time I went to go back. Yeah. Take up the matter. There was a proposal to set up a post. Maybe go time, maybe go fund. Okay. Let's have that question first. Mimi naitwa Chola, natumia 95% wale wako. Nilikuwa maeja. Nimefanya kosa kwa 5 years. Muda nilikuwa na hivi. Lakini msimu lazima kupiga yote hata si upisho ni lecture. Mimi nasomea. Mkitaka kuwa hivi ya kuhili usiweke hivi. Mimi nasema ni hawa watu wa juu hawajui pesa yao kwenda kwetu. Wanatumia pesa yetu ya ofisi. Kwa hiyo ulingo usiona kupaswa.
I wish he was
But a lot of respect for him, and we take seriously the issues that he raised, like that issue of 3%. Did you say 5%? 5% from 1% after every 3 years. It is a serious issue. We are also retirees, and we also want to get something at the end of the year. So it is not something that affects some retirees and it does not affect others. So we are looking forward even to those changes. And of course, now that we have seen the growth of the scheme, and especially the new scheme, that's our prayer. So as much as possible, let us remain united. Even in the forums where we are, let's care for each other. I think it means a lot. For me, it's always humbling to stand in front of you, even if it means. And by the way, the sponsor is not appointing retirees. for me and Zureha, we found ourselves here when we were working. And then by coincidence, the RBA changed the regulations, and that's when the trust deeds was adjusted from 3 years to 5 years. So we are just beneficiaries that we found ourselves in the office when it was changed from 3 years to 5 years. So very soon we'll be exiting, and I don't think the sponsor will continue. I remember when I was in the office, I actually requested the sponsor to nominate one person who is a retiree. And it was not as easy as it sounds. So we are just beneficiaries of finding ourselves as trustees when the regulations were changed. So he really didn't go out of his way to look for Nancy Badega alienda wapi so that we can appoint her. No. Nilijipata tu hapo, and then the regulation were changed from 3 years to 5 years. So always, personally, I believe in providing the right information so that we don't go feeling, and so that, again, we don't get emotional. We are almost going emotional with this information because some information is true, some is not so true, some is half truth. So asanteni sana for attending, and even for the patience, because you have been very, very patient. For those who are online and their questions were not answered, we have requested that the response will be there online because of time. We are trying to save time as possible, as much as possible. So ours is to thank God and to continue praying for PCK, so that you see now it has changed to government-owned enterprise. And we pray that now, running as a business, we are going to see better fruits, so that even when we go back to contributing, we are able to contribute, and that money is remitted to the scheme. And of course, the scheme is going to grow. So, asanteni sana, na Mungu awabariki. Asanti.
Thank you very much, Ma'am Nancy Madenge, for the closing remarks, and we are so, so grateful. But it is photo session. Before we pray, photo session. We want to see all our senior retirees. Wacha kwanza the trustees wasimama hapa mbele, alafu tuulize watu wachukue for history purpose. Please let us take photographs. It is in the program, and we'll please tungependa kuona mkisimama ile picha zichukuliwe, retirees pamoja na active members. Please take the photo. Then we'll be able to pray mpaka chakula ambaye tumeandaliwa tuiombe, alafu tuweze participate kwa kula pamoja. Bas service, tuanze na wale wako mbele, service providers. Tafadhali service providers, simameni ili baada ya nyinyi tupate senior citizens wakipiga picha pamoja nanyi. Asante. Service providers, please Kimandi, we want to see you standing. Let's take the shortest time possible. Please join. Yeah, Nancy, we are waiting for you. Ka katikati huko.
Posilisa kimia motema tambala moko Bolingo esili kokoma libulu ya silence Ozali na bomoi me motema nanga ebungi Chérie na leli réponds-moi malembe Ba message comme c'est bleu sans réponse Batu balobi salamakasi okoleka Me bango bayebite esika motema ezali kokweya.
Bas baada ya service providers, the fund managers, property managers, bas wanafuatwa na senior. Aya, seniors kujeni. Wakati ni wenu sasa. Akina Oding, yeah, akina Elijah, Odingo, Moses, tafadhali nafasi ni yenu sasa. Senior, hata mimi niko ndani.
Senior citizens,
mekimi eboyi ngai ntango nyonso rejo.
Atujaribu ku anze wapeleke haraka.
All seniors, thank you for coming. Thank you for coming. All the seniors who have come all the way from Nyeri, Kisumu. Oh yeah. Oh. Aya.
Honorable Alita Cham,